य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैता 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 एतद्वैता.
I would like to take the special session forward by Chairman Speak.
Thank you, Kirti. Respected speakers for the day, Ravishankar sir, Srikaanth sir, the Dean of SIRC, Vijayalakshmi madam, and my dear fellow students. A very good morning to all of you. It is my profound privilege and honor to address you as a SICASA chairman of SIRC and welcome you all to the Bank Audit Seminar. Friends, Bank Audit Seminar is like a festival to all of us. It's an annual fest where we expect that our firm get a bank audit, and students during articleship period definitely will be waiting for this moment to understand the intricity of the bank from the other side of the table. Along our life, we will be visiting the branch, we will be going to for opening of account and all that. Only this period, that is an important period where we analyze the banking system from other side of the table. As we all know, friends, the bank audit is a very comprehensive assignment, and I'm sure today's speaker for the full day will take you for all the processes which is we have to perform all our audit procedures, the way it has to be performed, what are the documentation to be collected, what are the special reporting requirement apart from our Companies Act, that is known as LFAR reporting and all that. Our speakers who are very renowned speakers on these subjects will take you through all the highlights. Friends, we have to understand that bank audit, unlike any other audit, is a race against time. The time period given to branch auditors are very less and the expectations deliverables are very high. Since we are only doing the branch audit of a banking system, there is an audit at the head office which our central statutory auditor will be doing. So our bank audit, the way the quality of our bank audit will actually determine the quality of the central statutory audit and the quality of the respective bank. So all the central statutory rely on the bank audit performs works what the branch auditors do. So it is our humble duty and our professional requirement that we perform this duty with due proper diligence and ensure the timeliness which have been given to us, we agree to do it. Whether it is Joe loan verification, whether it is cash credit, bank loan, vehicle loans verification, whether it is KYC verification, whether it is NPA verification. So there are a lot of angles which a chartered accountant is required to do, and we all know you being the students of the chartered accountant fraternity are the soldiers in performing this audit, so that the more you perform, the better comfort it will give to your partners who is signing the audit report. This is what I want to say. So please reach out to SIRC and one more thing which I would like to tell you is, please follow the Instagram channel of SIRC of ICAI and Instagram of SICASA, and please check the website. There are a lot of programs that are being planned for SICASA students for coming months. So let request you to please put up a word about all the SICASA program to your office, to your friends, to your colleagues, to your next generation students, to your senior students about the SICASA activity. Thank you, Kirtika, for the opportunity. Over to you.
Thank you, sir. Today marks a special milestone, The seminar of Bank Audit Seminar is officially the first event of our SICASA 26 and 27 term. As your Vice Chairman, it is filled with me immense pride to see such a dedicated turnout. We choose this topic because we all know that in the world of auditing, Bank Audit Seminar is the end game, as they require precision, speed, and unwavering eye for detail. We are currently in the thick of audit season, whether you're heading out to the branch in the heart of the Chennai or a rural area. The responsibility we carry as an auditor is significant. Today our goal is to move beyond just checking the boxes and truly understand the risk-based approach that the modern banking demands. To help us to navigate this complexity, we are privileged here to have the experts in our field. Mr. Srikaanth sir is a practicing chartered accountant and partner at NC Rajagopal, and Mr. Ravishankar sir is a practicing chartered accountant and partner at G. Balu and Associates. May I now request our Srikaanth sir to give the seminar. Mr. Srikaanth sir is a practicing chartered accountant and with a master's in economics from Madras University. He brings a unique analytical depth to our profession. Srikaanth sir specializes in corporate audits and manages a global portfolio of clients including listed entities, banking NBFCs, real estates, manufacturing, hospitalities, and PSUs. Beyond standard audit, he is a consultant for FEMA and RBI.
Good morning. Am I audible? Great, super. Good morning to everybody. Thank you for the lovely introduction. வார்த்தை சார் அப்படின்னு சொல்லிட்டாங்க. Right. First off, I thank SICASA and ICAI for this lovely speaking opportunity. I thank the seniors at my firm, Mrs. NC Rajagopal and Co. for helping me prepare. Thank you for Ravishankar sir for guiding me with the preparation. And also I thank one of my articles, Mr. Harish, who works with SICASA here, for helping me coordinate with the seminar here. And lastly and most importantly, thank you for everyone here, to coming here at 10 a.m. on a Sunday morning. It wasn't easy for me to get up and get prepared here, so I understand that it would have been that easy for you either. So thank you for coming. But now that we are here, tell me, why are we here? Don't say bank audit seminar, we are here for that. But why do we need a seminar for a bank audit? Okay? Like, we'll be seeing audits of many sectors, right? Trading concerns, manufacturing entities, listed companies, insurance and all. Why do we need a seminar for a bank audit specifically? Any thoughts? I've got 3 hours here, guys. I can't do it on my own. I need responses. So why is a bank audit seminar very important? Okay, because every audit is different in its own perspective, right? It is not like a bank audit has a separate vertical and all other audits are the same in the process that you follow. It's not like for every company you do the same OBV, vouching, ledger scrutiny and so on. Everything is different. But the range of difference is more when it comes to a bank audit. Because it is complex, the value of funds and the balance sheet total itself that you deal with is quite large. The complexity of the audit and the audit procedures that you are doing is high. The time frame that you are given with is very, very short, like how the chairman sir said in his intro speech. This morning on a Sunday we got the appointment of a couple branch audits, and we are expected to start it on the 2nd of April and sign it off by 8th of April. So this is the pressure that you will all have to work with your seniors in a bank audit. So this is the reason behind which why we need a bank audit seminar, because we don't have the time to go to the audit, understand the processes and then go about it. It doesn't work that way, right? So it is very useful that we all get prepared as much as we can, go through the literature that's available with ICAI, like the guidance note on bank audit of the latest edition 2026 is out now. It is useful that we all go through that right away. We go through all the important master directions and master circulars that the Reserve Bank of India gives out on a timely basis, so that we don't stumble when we are facing the deadlines with the bank audit. Be it a branch audit or a central stat audit or a local head office or just in the preparation of an LFAR also, the timelines and the complexity is very, very short here. And also, one nice thing that I've noted in a bank audit is the staff and the clients that you deal with, on an average basis, their age will be twice your age. And many times their experience itself will be twice your age, right? So the way that you will have to approach itself will be a bit different. They understand that you have all the knowledge required. They understand that you are here only to, understand, go through their processes, sign off the balance sheet and everything. But there is always this small stigma that they have that we are all, younger people who are there just to ask questions, get lunch, get reimbursed and go home. It should not be that way. And so it's important that we get prepared right away. So that's the idea behind having this seminar. That's what I believe at least. So now that we know why we are here, let's see what we have to go through. And, since we have a pretty long seminar right away, but still I believe to understand what a bank audit is in one day is quite impossible. So we will see specific areas of, items that in the balance sheet that you'll have to go through. Myself and Ravishankar sir will be going through these items. And also, as you gain experience, you will be noting new areas in the balance sheet also. Let's see how it goes about. Right, off the bat, these are all your 11th, 12th and CPT syllabus. So I'll take some time here, but it will not be too in-depth. And these theoretical areas, I've prepped the PPT quite, not that detailed. It could be because these are things that you already know, or it could be because I was quite lazy in preparing the PPT. We will never know what the actual reason was. Anyway, so when it comes to the types of banks that are set up in the Indian banking structure, there are several organizational types where you might get a chance of auditing. For example, you might even get the chance to audit the central stat balance sheet or a region of the RBI itself. I have done that personally. You might get to audit a public sector bank. It could be a central stat audit. It could be a region, a local head office, a particular one single branch or two branches. Or you could go to a smaller area. You can go through a cooperative society bank. You could see a local area bank or of sorts. So it is important to know what each bank holds within its jurisdictions, what is the type of organization it is, what its specific powers, responsibilities are, and what it cannot do. So first off, with the Reserve Bank of India, we all know that it gets its powers from the RBI Act 1934. So this specific act gives the RBI the power to have a monetary policy spelled out for the entire country of India. RBI Act gives powers to the RBI to regulate the other banks, the other PSBs, to license private banks. RBI also acts as a banker to the government itself and a banker to the other banks. So let's say you go through a specific region's trial balance of the RBI. It will have a current account of other public sector banks. It will have a not a savings bank, it will have a current account of Indian Bank, of SBI. It will have a current account of the state of Tamil Nadu. These accounts you might not find in other PSBs. Definitely not a current account of the state of Tamil Nadu. Also, one thing is, since RBI acts as a banker to the government, it just does not handle the current account or a loan account or something. It also acts as the custodian, the collector and the treasurer of the state's finances itself. RBI has the power, or rather it has been given the responsibility to collect the pension funds, the provident fund of all the employees in the particular state. So you will have to see those balances and all. And it is very nice to know that RBI, although its powers are very wide, it is not as large or it is not as equipped to handle all these functions. So some of it is outsourced to other banks also. So for example, if you go to say SBI or Indian Bank, you might be seeing the PPF accounts of some employees in a few states, but you must understand that they are not directly given to those banks. They act as collection agents and they do an agency service to the Reserve Bank of India. So we must understand how these powers flow. It is not the government who has given the power to Indian Bank. The RBI Act has given to RBI. RBI has approached the government and gotten the responsibility to collect the pensions, and RBI has then outsourced this to Indian Bank. So we must understand this structure, this flow, so that we will be able to go through the necessary agreements and documents, at the nitty-gritty level. For example, the collection fees, the agency fees and all, if we have to check, we have to understand all this background, right? So similar to RBI, we have other types of banks in India. We know what a scheduled commercial bank is. A scheduled commercial bank is basically a bank that is coming under the schedule of RBI, and it has been given the license to operate as a bank in India. This mainly gets split into two, public sector banks and private sector banks. Right. So what's a public sector bank? Public sector bank, we all know whenever the word public or public sector comes in, it means the ownership is by the government, right? That's all pretty fair. How did the government come to own these banks? Like, for example, if you take Canara Bank or Indian Overseas Bank, these were not formed by the government. Canara Bank's head office is in Bangalore. It does not mean the state of Karnataka or the Union of India formed Canara Bank. That did not happen. It was a few promoters who brought in these banks as private banks during their inception. And in fact, many of these banks were incorporated even before India's independence. They have been long standing. But after independence, the government realized that these private banks are not having the penetrating power to, fully spread all the socio-economic reforms that the government wanted the banks to spread. For example, the government wants agri subvention, benefits to go on to the farmers through banks. But not all banks had the presence in all the rural areas throughout India. So at one point, the government realized that if it took up this job, of running banks or owning and managing banks, the benefits that the government wanted the public to have could go in a little bit more deeper. So there were two acts that were brought in. Colloquially, they are called the Nationalization Acts. One happened in 1969, one happened in 1980. Through these acts, 14 banks in 69 and 6 banks in 80, they were brought under the fold of the ownership of the government of India. So they became public sector banks. They were private banks and then they became public sector banks. The list of banks and all will be available in the RBI website. Again, guys, one small disclaimer, not everything, of every single master circular or every single line from the guidance note can be covered here. Just like any other audit, the onus is on you to do more research, so that you can find more observations to the audit properly, everything and all. Now, these 20 banks, the examples like I said would be IOB, Canara Bank, Indian Bank and all. SBI is a public sector bank, but it was not nationalized. SBI has its own act. It has, I believe it was 55 or something. An SBI act is there, just like how an RBI act is there, right? The other banks all follow the Indian Banking Regulation Act of 1949. SBI also follows the Banking Regulation Act of 1949, right? So these 20 banks, and later there were a lot of mergers that happened within these banks itself. Like for example, UCO Bank, I believe not UCO Bank, there was a few banks that got covered into UCO Bank. There were a lot of banks that got merged with the State Bank of India. There are actually talks going on for a few banks to get merged now and a few private sector banks to get nationalized once again. We might get another Nationalization Act in 27 or 28, I'm not sure. So these structures are pretty fluid. They are not, very fixed. And there can be future private sector banks that might become PSBs. There can be new private sector banks which crop up, get the license of the RBI to act as a private sector bank. There can be NBFCs that get converted into banks. Even that has happened in the past, right? So all these structures are pretty fluid, but we need to understand what they are and what their specific powers are. Because let's say I'm an auditor of SBI, it has a different connotation than when I'm an auditor of a private sector bank. At least for that weight, you need to understand who you are auditing. Okay, right. So this is the PSB. Coming to the private banks, there are different types of private banks. All of them are given licenses under RBI to act as private banks, and all of them are private Indian banks, meaning their head office is available in India. Okay, so there can be local area banks. LABs are basically just inside 2 or 3 districts of a state. They don't cross that geographical sector or anything. Small finance banks are there. We have payments banks. Payments banks is a fairly new concept. You'll have Airtel's payments banks, we have Paytm, we have all these UPI payments, right? All of them are backed by a bank. They can either be a private bank or it can be a specific payments bank itself that is incorporated. And there are foreign banks in India. Foreign banks have their head office outside, but they have branches in India. We have HSBC, other foreign banks. Now, the point with foreign bank is RBI has its own master directions for a local office, for a branch office, or I don't remember, for a branch office, right? So there are different master directions that the RBI has given for foreign banks to operate inside India. The regulations that they follow are a little bit more stringent, right? So if you come to audit a foreign bank, you will have to understand their regulatory environment is a little different, and the rules that you have to have in your audit checklist will be a little bit more vast. Okay. Now these are the basic commercial banks that there is a higher chance that all of you might get to audit. Of course, there are also other corporation banks and regional rural banks. There are financial institutions like NABARD, but their appointment is a little bit rarer for you simply because their number is small. Although the urban cooperative banks are very high in actual number, not everyone here will get a chance to audit that. But to get a scheduled commercial banks audit, the probability is very, very high. So I focused my seminar more on the regulations that are available for scheduled commercial banks, but please understand majority of the same are also there for UCBs. In all the master directions that the RBI gives, there will be specific exemptions to some smaller banks like LABs or something like that. So when you go through the circulars or the master directions, please pay attention to these small details also. Okay. Now, right. I said that the probability that you might get to audit a public sector bank or a private sector bank is quite high. How does this probability get crystallized? This is through the statutory audit appointment process that we'll have to go through. This is quite interesting because in 2021, the whole market for audit of banks, public sector banks and NBFCs opened up. Before that, you all know the appointment tenors under the Companies Act. You know the rotation rules and all, right? Say it's a company, let's say it's a public company which has borrowings of 50 crores or it has a capital of 10 crores. You have rotation rules coming in. Your tenor is 2 terms of 5 years. So it means a total of 10 years is what you'll be auditing that company. You have a cooling period of 5 years and then you might get the chance to come back in. With this particular circular that came from the RBI in April 2021, for banks and NBFCs, the tenor was reduced to 3 years and the cooling period was increased to 6 years. For some banks, the tenor was quite similar in the past also because of their own private rules. But RBI now made it uniform for all entities. They call it regulated entities, REs is the term that is used in that particular circular. Okay. So what happens is, now I have a tenor of 3 years, I have a cooling period of 6 years, means there are 3 audit firms that get to audit a particular entity within a span of 9 years. It means your market has opened up. Before, for a particular bank, if there were 5 auditors who would be working on 5 or 6 banks, now 15 auditors will have to do those 5 banks. So the market has opened up. That is one. Another advantage that has come in through this circular is joint audit has also been specified for banks with asset size beyond 15,000 crores. And any decent bank that we can name will have an asset size of at least 15,000 crores, right? So which means not just 15 firms, at least 30 firms will get the market for these 9 years. Right? So because of this circular, you will have to be thanking your stars that you might get the opportunity to do an actual bank audit. Okay, of a central statutory audit, in fact, not just a statutory branch audit. So yeah, so these are the rules. Like I said, at least if the asset size is 15,000 crores or higher, a joint audit has been specified. But the RBI has also given the maximum number of auditors that can be appointed based on the asset size, right? It goes up to more than 20 lakh crores, where up to 12 auditors can be appointed. I don't want to name the bank, but when I was the central stat auditor about 3-4 years back, there were 14 joint auditors who were doing that particular bank. So what happened was, the vertical that was given to my firm was not as big as what we would have liked it to be. Right? we could not even see what the investments of that bank was. Of course, we could see the balance sheet, but we could not see into the details or anything. But since the maximum number of auditors is also restricted, it means the joint allocation that happens within the auditors will be more widespread. So you will get the opportunity to see more areas inside the bank, and you will be able to improve your knowledge on bank audits. So that is also another advantage. You can see it both sides. Because if there's a minimum cap, you get the audits. Because there is a maximum cap, you get to see more inside the audit and such. Now, the regulation for a central statutory audit and a statutory branch audit. I shouldn't call it central stat. It's statutory central audit now. SCA and SBA. The SCAs, that is the statutory central audit, as well as the statutory audits of NBFCs, non-banking finance companies, those are covered under the April 2021 Master Circular that I mentioned right now. The source is also given at the top if you want to go through. The statutory branch audit has always had separate guidelines given by the bank on a regular basis, and the last one came in 2023. And they said from financial year 23-24, these new guidelines would come into the picture. So what we have now is a separate set of eligibility criteria for a statutory central audit and for a statutory branch audit. The responsibilities and powers are different. The way we can get audited is different. The appointed is different. The way the maximum tenure that we be able to do the audit is different. The rotation period, the cooling period is also different, right? So this gives the difference between an SCA and SBA, which is confined from two different circulars. I can give you a minute if you want to go through. Can I go on? Okay. I want you to focus on this particular point called branch coverage role. This is very important. Let's say you are the statutory central auditor of a PSB, and that particular bank has, say, 6 auditors. So what happens is, between the 6 auditors, there will be an allocation of work, which is under the standard auditing. We all know this. Like, there will be one auditor who goes through the investments, one auditor who goes through the forex operations. All of them will give their audit report together. The different regions of the bank, they call it the local head offices. One particular auditor would be seeing the west, one the south, one east, and all these allocations will be there. But RBI says the top 20 branches based on the advances size, which covers at least 15% of the advances, should be done only by the SCAs, only by the statutory central auditors. From the 21st, it comes to the statutory branch audit. Okay, and before these guidelines came into the picture, RBI was also saying the minimum number of branches covering the minimum percentage of advances that the branch auditors have to cover. But now that the top 20 are being done by the SCAs, RBI has now loosened those norms. It says each bank has to have its own board approved policy for the number of branches that need to be done by the SBAs. So in the SBA's guidelines from RBI, you will not see the maximum or the minimum number of branches that all the branch auditors have to see put together. It is the bank's forte to confirm. But for each firm, each audit firm, the maximum number of branch audits is capped at 2. And of course, their tenure is maximum 4 years for an SBA. And if they are, the statutory central auditor in one PSB, they can't be the branch auditor in another PSB. Their cooling period is 4 years, just like how their tenure is 4 years. All those things are there, right? And also, it's very important to note, each bank might have its own rules on the eligibility of the auditors that it appoints. Let's say SBA. If we go to the website of SBA, you will note that it says these are the eligibility norms for how we appoint our statutory central auditor and our statutory branch auditor. This can differ from each bank to bank, and RBI has given the powers to each bank to have their own set of limits, but they should not undermine the limits set by RBI. SBI cannot now come and say that the tenure of each statutory branch audit will be more than 4 years. That cannot happen, but it can cap it at 2 because RBI says it's 4 years. Okay, so this is also allowed. So when we want to become the auditor of a particular bank, it's good to note what the eligibility criteria of each bank is. But the catch is here. From the auditor's perspective, you can't decide which particular bank you want to audit. You are supposed to get empaneled with the C&AG and with the ICAI because the appointment procedures is a little different than how it would happen in a normal public or a private sector company. That is also covered here. Yeah. So what happens is that I believe this happens generally in every Jan or Feb. Every audit firm will get itself empaneled. Empaneled as in it will get itself providing all its eligibility criteria to the ICAI and to the RBI, and RBI goes through these lists of data that it has and it sends this data to all the banks. All the eligible firms are listed out to all the banks by RBI every year. From that list, each bank can select the SCAs that it wants to appoint and then get the prior approval of RBI before July every year. So once that approval is sought, then the PSBs will appoint their central statutory auditor. This process is quite similar for SBAs also. So what we have to go through to get appointed is to get ourselves empaneled with the ICAI and the RBI every year, right? And the eligibility criteria, the minimum eligibility criteria that the auditors need to have is also listed out here. Again, banks can their own criteria which do not undermine these limits. And this has the number of partners, the number of articles. The professional staff here basically means the articles along with a few other staff who is also included inside this definition. So it actually benefits that once you finish your CA, you get yourself qualified for either DISA or CISA, because the earlier thought used to be that once you finish DISA or CISA, it could help us get appointed with branch audits. It still holds good today. So it hasn't gone out of thought. I suggest please do more qualification courses once you finish your final. Your studies aren't over yet. It will not be over. Okay. Now, again, so all this is covered. Yeah, these are the powers and duties of an SCA and an SBA. So basically, who do we do an audit to? We report to the members, correct? And along with the members, indirectly we address it to all the stakeholders of the company, correct? Once an annual report is issued, it is gone through the entire public at large apart from the members of the company. So who does the SCA address his audit report to? He gives it to the audit committee of the bank and to the members. And he also submits it to the Reserve Bank of India. To the Reserve Bank of India, an SCA gives his audit report not just as an ordinary audit report under SA 700. He also issues something called an LFAR, a long form audit report. Okay, so this will be covered in detail in the second session. The statutory branch auditor also submits his audit report under SA 700 and the LFAR, but it is not addressed to all the stakeholders and not to all the members. It is addressed to the statutory central auditor. It is the job of the SCA to collect all these audit reports from the branch auditors, to go through them, go through for any qualifications or modifications that might be there, any specific observations that the auditor might have posed, and to see what their materiality is, to whether carry it on in their overall consolidated audit report or not. This is the job of the central statutory auditor. Again, SA 600, the new revised SA 600 will be very much applicable here. So central statutory auditor's job also includes going through the workings of the branch auditor in case he feels that the audit procedures done are not, to his satisfaction. The ultimate responsibility will be on the central statutory auditor under SA 600. Please do keep this in mind, right? Now, okay, so we saw why we are here, why a bank audit seminar is required. We saw in case we do get appointed, how we get appointed, and what is the type of entity that we might get to audit and all. Let's say we do get appointed. we become the statutory central auditor of SBI. What are we supposed to do? Your audit report, what does it do? It gives an opinion on the financial statements, correct? So what we do, the primary thing that we'll have to do is go through the financial statements of the bank as a whole, correct? This holds good not just at the central level, it holds good at the branch level also. Each branch should also prepare its financial statements. That is also, certified by the branch auditor. They might not call it financial statements. They might not call it a balance sheet and a P&L. They might, call it different annexures or different certificates. The terminologies might differ, but basically all of them provide data towards the consolidated financials, or rather towards the consolidation of the standalone financials of each bank at its central head office level. Right? So it is your responsibility either as a central auditor or a branch auditor to understand what the format of a balance sheet will be, and it is not the same as it is in the Schedule 3 of the Companies Act 2013. In fact, Companies Act 2013 specifically states that it does not cover the financial statements of banking companies, electricity companies, and who else? Insurance companies, right? So, Section 129 of Companies Act, it does not simply say, I don't cover bank financial statements. It's not like that. What 129 says is, it's the responsibility of the board of directors to prepare the financials to give a fair and true and fair view, correct? It says, if the financial statements of a banking company or an insurance or an electricity company is prepared under the format given of their own act, that does not mean it is not covering a true and fair view. So that's what Section 129 says. This is one aspect. And if you go to Schedule 3 of the Banking Regulation Act, which gives the format of these financial statements, they also say that this format is to be strictly adhered to, but if there are any supplementary information that needs to be provided, the banks are supposed to do that. And this supplementary information includes the notes to accounts and other explanatory information that is supposed to be covered. The first paragraph of your audit report, it says the financial comprises of the balance sheet, P&L, notes and other explanatory information, right? So that notes and explanatory information, where does that come from for a bank if it is not covered under Schedule 3 of the Companies Act? So that comes from a separate master direction given by RBI. And these master directions are different for each type of bank. So that is why you need to understand what this particular slide is all about, because the format itself might change based on the type of the bank, right? So if I cover the master directions on the disclosures and notes to accounts of the financial statements of a public sector bank, that master direction also says you are supposed to cover the details given in Schedule 3 of BRA. That is the basic format given by the IBRA. You are supposed to cover the mandatory disclosures that are required under this master direction of that particular public sector bank. And if the management feels that if there is any other information that can be provided which will be beneficial to the users of information on them making any economic decisions, then that should also be done. So again, in every single area where a format is prescribed, be it Schedule 3 of BRA, Schedule 3 of Companies Act, or these master directions by RBI, they are all minimum norms. Whatever that the bank wants to give over and above that, it is the bank's prerogative. But once they are included in the notes, it is the responsibility of the auditor to go through those disclosures. You can't, exempt yourself from saying the basic requirements are all covered and the other details I don't know what to do about. You can't do that, right? Unless there are exigency circumstances that can be done, where you end up providing a disclaimer of opinion for those areas, but that is very, very rare. I don't think many of us will be able to see that. Now, coming to the format of the financial statements of a bank, they are given as different schedules. Inside Schedule 3, the format of the Banking Regulation Act, each area, let's say in the financial statements of a company, we call it notes, right? Generally, Note A or Note 1 is the significant accounting policies, Note 2 is capital. If it's Ind AS, Note 2 is property, plant and equipment, right? Here it is called schedules. Schedule 1 is capital, schedule 2 is reserves and surplus. It goes on up to schedule 12, which is contingent liabilities, and then it goes on to schedule 16, which ends up being the notes to accounts. And from schedule 17, the management can give any information that it wants to give extra. Okay, so let us go through the format. I have a link, let's see if it works. Okay, super, right. So this is the format that is given under third schedule of BRA. I suggest that all of you memorize this format to ensure there are no differences. Usually these things are automated at the branch level, even at the central stat level. They won't deviate too much from this format. But at the articleship level, it is beneficial that we know these things and compare with the actual prescribed format here for your knowledge purpose. It will help you, to get these nitty-gritties confirmed as you go through your career. Now, so let's cover these 16 schedules that are given in the financial statements. The way I've structured is, other than advances, when I go through these financials, if there are any specific points that I would like you all to cover during your audit, I'll finish it here itself. So, and then advances will be at the end, because when you think of a branch audit or a bank audit, you think of advances because that is the highest number in a balance sheet, right? So that alone, let's keep it separate. And please keep this one thing in mind. When you see a bank audit, you are not supposed to see only the advances. You are not only supposed to see the deposits or areas that are different and specific to bank audits. You are also supposed to see other areas which you see in all your other audits also. You are supposed to audit HR, your admin expenses, your PPE, your depreciation schedule. All that stuff is still there. But there are some areas that we will have to see extra when it comes to bank audit, right? Okay. So schedule 1 capital, this is pretty standard stuff. Here, the statutory reserve. Statutory reserve is prescribed by the RBI. You might have seen this in your reporting criteria for NBFCs also. This applies to banks as well. Every bank or an NBFC every year has to transfer at least 20% of its profits to a statutory reserve. This comes from section 17 of the BRA. No, of the RBI Act, sorry. So you are supposed to report whether this transfer from the surplus in the statement of P&L to the statutory reserve has happened or not. It is not like if a bank makes losses, it removes its statutory reserves, but whenever a profit is there, it will get added here. So that is a reporting point. So please make sure that is covered. Okay. Here, deposits. Schedule 3, deposits is a huge liability for a bank. So what are deposits? Thoughts? Come on guys. 2 மணி நேரம் பேசணும், ஏதாச்சும் சொல்லுங்க. What are the types of deposits? இங்க மேலேயே இருக்காது, பார்த்து கூட படிக்கலாம். Right. So basically deposits are from the public at large. அதுதான் முக்கியம். A bank can have deposits from other banks, from others and all, but when you focus on an audit, your main importance would be on the deposits from the public, because you have been appointed as a bank auditor. This seminar is conducted, there are huge master directions that are existing because public money is involved. That public money is here in deposits, right? So when it comes to deposits, there are specific areas that you have to definitely cover. The first thing is KYC. Sometimes in case you have RDs and FDs in a bank for a long period, once every 2.5 years, the branch would call you and ask you to resubmit your KYC documents, your PAN, Aadhaar or any other identification, right? So those things have to be checked. It always helps for you to recompute the interest expense. The branch officials will definitely say that the interest expense on these deposits is computerized. So when a term deposit is entered into, they have a matrix saying if this is the amount and this is the tenor of the deposit, this is the interest, and that is computerized, sir. We don't enter the interest amount, we don't have control over it, but it helps at the audit level to recompute. And please don't recompute on a whole. Don't do the branch has 150 crores of deposits. Let's keep the average at 6% and see if there is at least 9 crores of interest expense. Don't do that. Do it at an individual level. Because I'll give you an example. Rounding of errors can come up. I saw this in NBFC once. So what happened is, although it was NBFC, you can get that parlance from banks also. What that company did was, in its own matrix and schema, in its books of accounts, it said for every 1 lakh of deposit that is made under that particular scheme, the interest rate would be 5%, and the interest that should be the total maturity amount would come to 1 lakh and 5,000. This was the code that was made in the NBFC. So what happened is, if I put 2 lakhs of deposit, the computer would calculate it at 2 into 1 lakh and 5,000. If it was 100 lakhs, it would calculate it 100 into 1 lakh and 5,000. It was not 100 lakhs into 5% into the period. It was not like that. It was fixed based on that 105%. So because of this, rounding of errors came up. So for each depositor, the interest income that he has is different from what he is supposed to get, and that is very, very marginal. Because it's a rounding of error, it would be a few thousands if the deposit was in crores. But for the NBFC as a whole, the amount was very large. Okay, so it helps that you recompute. You can use basic Excel here. You don't have to, go have big CAT tools or auditing tools or anything. Excel would work. So KYC, you'll have to see. You will have to recompute the interest expense on a very small sample basis, and then look for unpaid but matured deposits. Term deposits which are supposed to get auto renewed every year. In case there are stoppages in the renewal because the KYC has not been updated. See, what happens is, there might be elderly NRIs. That is a very classic case. Elderly NRIs will put, say, 50 lakhs in a particular bank. They will be staying in the US. They might forget to renew it. They might not provide their KYC details on a regular basis. For all we know, the bank would not even know if the NRI is alive or not, but the deposit would be live. So what happens in this case? The ownership has to get changed. It is the bank's responsibility to identify to whom the deposit is to be closed in favor of, because it is their liability. Correct? So look for these long pending, unrenewed, KYC not updated deposit cases. It will help, right? So then what else? Bills payable. Okay. Interest accrued cash. Okay. With regard to cash in hand. Now, a bank can have a little portion of its cash deposited with the RBI. It will be useful for their SLR and CRR computations also. Correct? So, we will have to get a confirmation from the RBI about the balance that each branch has. Because like I said in the beginning, the RBI is a banker's bank, right? RBI will have the current account of SBI. So when you audit SBI, just like how you do a BRS and get a bank confirmation, you are supposed to get it from the RBI. Try to get a direct confirmation. It might not work at the branch level, because at the branch level, there mostly will not be cash held with the RBI. The branch cash will be with the head office, and the head office will have it with the RBI, right? So in case you do get to see the central statutory audit and your vertical is provided with cash and bank balances, try to get these direct confirmations. Okay. Similarly with current accounts also. Right. Investments is a bit niche area. So just like advances, I have a few slides on investments at the end. We'll see how it goes. Purchased. Fixed assets. Like fixed assets, HR, depreciation calculation. These items are generally centralized. So when you come to the statutory branch audit and you ask, sir, depreciation computation kudunga appadina kudukka matanga. They won't have it. They don't do the computation. But fixed asset additions can be vouched. Fixed asset deletions can be vouched. There are bank internal policies on acquisition and disposal of assets. There are approval matrices. A branch manager cannot, buy a particular sofa beyond amount or something like that. Those policies will be available. So we'll have to ensure that these approval matrices are adhered to. So please keep that in mind. expenses, right? Coming to the P&L, just like how I asked you to recompute interest expenses on deposits, it works on the interest income from loans also. Okay, because later when I talk about advances, I will ask you to look into their ledger scrutiny and each current or a loan account, where the interest will be debited on a periodical basis. That interest can also be recomputed. Why this is important is, when it comes to deposits, when it comes to deposits, the interest rate is fixed across depositors. It is based on a matrix, based on the amount, the slab rates are there, it is based on the tenor of deposit. But when it comes to the interest rate on loans given, it is not fixed. The banks will have a credit policy, then that will be a range. For example, a bank's policy can say, if it is a term loan given in a metro city between 50 and 75 crores for 15 to 16 years, the rate has to be at least 11.75 to 12.3. So these sort of range will be mentioned at the bank's central level, but the bank manager will have the power to negotiate between 11.75 and 12.3, correct? Because at the end of the day, banks are also a business. The branch managers are given targets for advances and for getting deposits, so they are given the power to negotiate, correct? So the interest rate will be different across similar advances, which means recomputation becomes necessary. Even, there can be very small tiny errors of entering the interest rate into the system. We've seen cases like that happen for small ticket loans, because if you go to say a rural branch, there might be around 500 agri loans or 300 jewel loans or something like that. There can be a clerical error of not entering the interest rate properly. Instead of 11.75, someone might enter 11.78, right? So you will have to go through the sanction letter, see if the approved rate, the sanction rate is available in the system, and whether a proper recomputation of the interest is happening. So please do that. Then operating expenses, this stuff, admin expenses la paakano. In admin expenses and operating expenses, please look into the law charges. Okay, law charges or legal charges, some might call it professional charges. So what happens is, any advances on which the branch or the bank is having a legal dispute, you will have to get a separate list at the beginning of the audit, correct? But there can be a possibility that a few cases might be missed out when this list is provided to you. But adhikala there would have been advocate fees that is paid. So you might have to reconcile the list of legal disputes given to you by the branch manager with the expense that is incurred here to ensure that there is no missing out. This will help you in your forming an opinion, because when there is a legal dispute and as per the existing IRAC norms, if an account will have to be an NPA, but the branch calls it a performing asset, you won't get to know about this unless you look into that matter. To look into that matter, you need to know what are the matters where a dispute is existing. Under this legal charges and law charges will help you. Okay, so please keep an eye on this also. Okay, these are schedules. Right. So, like I said, these 16 schedules are the format given under Schedule 3 of BRA, Banking Regulation Act. Apart from this, from Schedule 17, what is there? The notes to accounts and explanatory statements, which is prescribed by the master directions on RBI, not by the BRA, correct? So, those master directions will tell you what are the minimum disclosures that will have to be done. Yeah, this one. I have not, the master directions are quite large. There are a lot of notes that will have to be given. The major ones are covered here. So the banks will have to disclose what their capital adequacy norms are, what their asset quality is. Asset quality basically means a table on their total advances, and it will be split into geographical sectors or based on whether they are performing, non-performing, D1, D2 loss assets, what their provisions are. You might think of this as segmental reporting. Not that exactly, but you can take a parlance for you to understand. in segmental reporting, you have a geographical sector and you have other business segments, right? So similarly, the asset quality disclosure will also be based on whether they are performing NPA, D1, D2, etc. There will be disclosures on the movement of provisions. Now, this will serve you in two ways. One, obviously, you will have to check whether the disclosures are right. The computations need to be right. The total of the provisions need to match with the balance sheet. Basic stuff will all be right. But before you start an audit, if this disclosure is provided to you, you get a chance to make your sampling more scientific. Let's say there has been a particular downgradation during the year or an upgradation. Downgradation means an asset, a loan becoming an NPA during the year. An upgradation means an NPA loan becoming a performing loan during the year. All that is covered under these disclosures. So when I see a movement in the provisions, I know that there has either been a downgradation or upgradation. I will ensure that that is included in my sample. Okay, so that is another added advantage when you start checking these disclosures, right? Also, similarly, if you look at the ALM maturity profile, ALM means asset liability mismatch. Okay, it is not AML. AML is anti-money laundering. This is ALM. Okay, so what ALM does is it gives a breakup of the aging of its assets and liabilities, not on the historical side, but it is forward looking. This is similar to how you disclose the ALM of financial instruments under Ind AS. Like, let's say I have deposits. There are different tenors of deposits, right? It can be 3 months, 6 months, 1 year, 5 years and all. So all that is disclosed here. It is similar for loans also. You have to go through these disclosures. Okay, now that I've covered the financials, I want to go into specific areas that I want to cover, advances and investments. Any doubts till now, or do we have a QA session at the end? How do you prefer? No doubts? Super.
So we'll be having a 10-minute break now and we'll be resuming at 11:30. Is it fine? The refreshments are arranged with canopy.
Guys, we'll start? Okay. Right. Just to summarize, we started with why we are here, why a bank audit is important. Brunch time ஆயிடுச்சு, still we are here. அதுக்கப்புறமா we saw what are the type of banks that we might get to audit, how we get appointed to a bank or an NBFC, and what the financial statements contains. Correct? இதுக்கப்புறமா I have a few specific areas, not the financials as a whole. I am planning to finish advances, investments and risk management. We'll see how the time permits. Okay, but advances definitely I'll complete. Voila. Right. So, okay, this morning I got appointed as a statutory branch auditor of a PSP. I did. So, I plan to call the branch manager tomorrow morning. Correct, Monday morning I'll call him. Ask him, sir, could you please give me a brief on your branch so that I can plan my audit resources and, the timelines and stuff. What is the first thing that he'll tell me? What the total advances is. Adha solluvar. Okay va? So he'll say, sir, this is an agriculture oriented branch or this is an industry oriented branch. We have total advances of say 500 crores. That's how he will start. Right? And he would say, sir, fund based is this much, non-fund based is this much. Right? So if I look into the types of advances, this is similar to every single theory exam paper question that you'll write. Any categorization will be based on different types, right? Adhe madri, types of advances is also based on different parameters. If I look at the fund flow, I'll call it a fund based or a non-fund based advance. A fund based means where an actual fund flow is happening, where money is given to the borrower, and a non-fund based advance is where a guarantee or a letter of credit is given where an immediate fund flow is not there. There can be chances where there will be a fund flow in the future where an NFB gets converted into an FB. That can happen. Okay. And then if I call it say on the use for which it is going to be done, It can either be a working capital advance or it can be a term loan. Okay, it can be an agricultural advance or it can be a non-agricultural loan. In the mari, the classifications are different. But if you look at from an auditor's perspective, we first see if it's a small branch or a large branch. Under RBI, there are parameters given to call a branch as a small branch, a large branch, a very large branch. They are called VLBs. But these are for the internal management of each bank. As far as an auditor is concerned, why he would call a small branch or a large branch is to get an idea of what the ticket size of the loans are going to be, what the nature of loans are going to be. Like for example, if I'm going to get a branch in a rural area and the value of advances is say 200 or 250 crores and the ticket size is 5 lakhs or 6 lakhs, I can get an idea that the majority of the loans would be agri loans or agri related dwell loans and such. But if I get an audit of say an industrial finance branch in Chennai and the total advances is 12,000 crores and the number of advances is only 50 and the ticket size is around 500 crores per loan, I can understand that majority of the loans are for big corporates and then majority will not be working capital but rather term loans, right? All this will help me in planning my audit on what sort of resources I will have to use, what are the guidelines that I will have to revise myself. So to do all this planning, we generally see the nature, the ticket size and the size of advances in each branch. Okay. Now, right. So, how I am planning to cover advances is I have specific areas on agri loans that I want all of you to know, simply because the number of branches in India covering agri loans is higher. So the probability that you might see a smaller branch with agri loans is higher. So first let's go through that and then let's see the other types of loans that a bank can give and what the connected verifications that you will have to do. We'll go in this order. Okay. Right. And irrespective of whether it is an agri oriented branch or an industry oriented branch or whatever, these specific areas you have to definitely see, because this will help you understand and plan your audit and it will also help you take your samples on a scientific basis. So first thing is the bank's credit policy. Every bank, be it a PSB or a private bank, has to have a board approved credit policy. This will have the guidelines that each branch is supposed to follow. I said earlier that a branch manager can negotiate on the interest rates between, the example I gave was between 1175 and 1230, right? These ranges are given in the bank's credit policy. The approval matrices of which level of committee can approve what ticket size of loan or what nature of loan, how much tenor can be given for each sector of loan, what the interest rate has to be. All these are covered under the bank's credit policy. Whether you are an SCA or an SBA, you have the right to ask for the bank's credit policy. Please do go through that and ensure that the branch adheres to this policy. It will, but it's better that you all go through this. Okay. Now, once you go to the branch or a bank, the first thing that you will ask for is the list of advances along with the financials, right? So in this list, a lot of several columns will be there. It will just not be what the account number is, who the party is, what nature, what loan amount. These won't be there. There will be about 20-25 columns. They will cover several aspects like whether it's secured or unsecured, whether it's a performing or an NPA, what the interest rate is, what the tenor is, what the maturity period is. All such columns are given not for your information because it is used for the consolidation by the bank, but you can use it to your advantage. You can use it to make your sampling more scientific. You can use it to ensure that all different sectors of loans are covered by you in your sample, because it is not that you will have to see only the fresh loans that have been disbursed in that year. You will also have to see existing loans, correct? So which loans to see? Each branch might have around 300-400 loans. So you will obviously not be able to see the entire thing. 100% checking practically is not possible. You will have to take a sample. So how to go about that sample can be taken from the list of advances. Okay. And there are a few RBI guidelines like one account NPA, all account NPA, which can be taken from this list itself. Very specifically, I'll just explain this. one account NPA, all account NPA means if I am a borrower, I have one single SIF number and I have 3 or 4 facilities with your bank. I have a term loan, I have a CC, I have a separate OD that is de-linked from my CC and all, and I have another term loan. If I become an NPA in one single facility, then all the other loans should also be marked as an NPA. Okay, that is this specific rule, and there can be a problem where there are multiple SIFs given for one single customer. This is an age-old legacy problem. Fresh customers might not have this, but based on the PAN or other KYC related documents, you will be able to identify different SIFs for the same party. So, up a different SIF all of the accounts should be marked as an NPA, which will be an audit point for you. Okay, so that is this specific point. And this branch level exception reports, EW signal reports, the internal audit, concurrent audit, all these reports are regularly available with banks, with branches on a quarterly or a half yearly basis. Exception reports are actually taken on a daily basis. They are available as at EOD for each branches. You can ask for them. All these will help you in identifying your sample. Okay. I also have a connecting point here. When I come to risk management, we will see how it works there. Okay. Now, what are quick mortality cases? Quick mortality cases are those where I've sanctioned a loan this year and they have been downgraded as an NPA in this year itself. Those are quick mortality cases. Okay, so you will have to definitely go through them in your sample to see there might be a fraud angle, there might be, correct, or there might be a collusion. So you will have to go through these definitely in your sample. So adukku please ensure that these items are covered. Now, coming to agri loans. Now, like I said, I'll be covering agri loans and non-agri loans separately. And another aspect of verification will be credit appraisal related verification and credit monitoring related verification. Appraisal means at the time of disbursement, what are the checks that a branch will do and what are the audit points that you will have to go through. Credit monitoring means when the loan is live and ongoing, what are the things that the branch and US auditor are supposed to look at. So we'll look at those also. Now, coming to agri loans. What are agri loans? Agriculture related loans, right? So, agri loans are defined by the RBI as loans which are used for agriculture purpose, allied agricultural purposes like say buying a tractor or setting up agricultural infrastructure projects like an irrigation project or something. It need not always be a farm loan. That is the point. Anything that is related to agriculture but given under the specific definition by RBI will be an agricultural loan. Okay, so you will have to first identify those loans. They will be available as a sector. The list of advances that the branch gives you will be classified sectorally. They will say, sir, these are the agri loans, these are the infrastructure loans, these are the other personal loans and such. But you will have to ensure that not other loans are classified as agri by mistake. Why will this happen? Why would a branch want to classify a loan as an agri loan instead of something else? In case it is done intentionally, why would that happen? So this happens because of a concept called priority sector lending, PSL. Okay. Now, the RBI, along with its advice from the government, the union government, has identified some sectors as essential sectors or priority sectors. So these will include agriculture, these will include MSME, education and welfare related loans. These are called PSL loans because the government and because of that the RBI, they want the banks to push their lending towards these sectors. They want to ensure that these sectors are definitely aided by the banks in the country and then the residual can go to the other sectors. This is the idea. So RBI has given minimum lending norms to each bank to be diverted specifically towards PSLs. The overall cap is at 40. 40% of the loans of each bank has to be towards PSL. And there are subcategories also. I believe it is 18 for MSME, but caps are there. Now, to ensure that a bank meets these caps, there can be an intentional misclassification of a loan as an agri loan. Correct? but you as an auditor have to definitely check that the classifications are not wrong. Okay, and in this there is one specific concept called onward lending. This is the fourth bullet, right? So this personally is a very good topic for me because I've seen these onward lendings in NBFCs also. Let's take a bank. It has an asset size of 1 lakh crore and at least 40% of it needs to go to PSL, correct? 40,000 crores needs to go to agri loans and MSME, whatever. Obviously, the banks will not be able to penetrate into the market so much that the entire 40,000 crores is dispersed by themselves. They might not have the competitive edge or the capability itself to do that, correct? So this concept of onward lending was brought in. So what onward lending means is, I am a bank, I will lend to an NBFC, and that particular loan to the NBFC will be used towards PSLs, because NBFCs might be regionally set up. They will have a better penetration power in individual rural areas, especially MFIs also, microfinance industries also, institutions. So the bank will deem it in such a way that if I give out of that 40,000, if I say give 4,000 crores to this particular NBFC, I believe that NBFC will be able to cover the entire rural areas of southern Tamil Nadu, which I will not be able to do. The NBFC will be able to do it better. If the bank deems in such a way, it can give 4,000 crores to that NBFC, and that will also get classified as a PSL loan for the bank. Because the NBFC is helping the bank to reach its PSL targets, right? Because of that, the NBFCs will also get a lower rate of interest in these PSL loans. So the NBFCs will want a PSL onward lending borrowing from a bank, and a bank also wants to give. But as an auditor, we have to check one thing. The end use of that NBFC is specifically towards PSL. There will have to be quarterly declarations and certificates given by the borrower saying that the end use towards PSL is properly documented and right, so that we can ensure that the PSL targets are reached. And it brings back to my first point, there are no misclassifications, that a non-agri loan by default has not been classified as an agri loan. Okay, now, so like I said, there are different types of agri loans, right? It can be a farm loan by default, or it can be an agri infra loan, it can be a jewel loan, it can be an onward lending to NBFCs. All these will be agri loans, correct? Now, when there is an agri loan, the first thing that you will have to see is that the end use is properly available and it is in fact an agri loan. How do you check this? How do you ensure that a loan that is said to be towards an agriculture purpose is in fact used for agriculture purpose? What documentation will be available for you? This documentation is also available in 2 stages. When I said advanced verification, I called it credit appraisal and credit monitoring, right? At both of these stages, documents will have to be maintained stating the classification of the loan and giving a supporting evidence towards that, and both of that will have to be checked by you. If you look at the credit appraisal stage, you can say that there can be a declaration given by the borrower that this is in fact towards an agri loan. He will be giving let's say his land documents, which is an agricultural land, and he would say that this loan is to be used towards the crops that are standing on that particular land. So these sort of declarations can help you at the credit appraisal stage. Similarly, when you come to your credit monitoring, that would be very specific to onward lending, because majority of the agri loans tenor is very small, 1 year, 2 year. So your credit monitoring mostly will be limited to NBFCs and onward lendings only. So these NBFCs will have to give a quarterly certificate saying this quarter as at 30th June 2026, these are the list of loans that I have dispersed out of the loan that the bank has given me, and all these receivables are agri related. So when the NBFC declares such a certificate, it will be an auditor certified certificate. It could be the statutory auditor of that NBFC. Okay, so then at the credit monitoring stage also, you will know that the loan continues to be classified as an agri loan. Okay, now another example could be let's call it a jewel loan. Okay, when the bank disperses a jewel loan For an agricultural purpose, the borrower has to give a declaration saying this jewel is to be used towards my agricultural harvesting. Okay, such a written document will be there. That is one point. Another point is he will also specify what the crop is, and the bank will also classify whether it's a kharif crop or a rabi crop, whether it's a short-term crop or a long-term crop and such. So all these classifications will also help you to understand whether it's an agri loan or not. Okay, so since I touched on kharif and rabi crops, I'll go a little deeper into this. Kharif is summer, rabi is winter, correct? Now, there are some crops in India which grow specifically in kharif. I believe it will be paddy. Rabi could be wheat. I'm not really sure on this. But another aspect is short-term loans and long-term. Short-term crop loans and long-term crop loans. What are they? Crops are classified based on their harvesting period. I sow my seeds this summer, and if I am able to harvest within one crop cycle, it's called a crop cycle, then it is a short-term crop. If it is 2 crop cycles, it is a long-term crop. Okay, so what this cycle is? A cycle could be a year, it could be one harvesting season, which could be 1 quarter, or for some crops it could be 6 months. These specifications are given by a body called SLBC. It's called State Level Bankers Committee. Okay, this SLBC, because it's state level, it is set up at each state, and it consists of officials from the major banks in that state and from the state government and representatives from the union government. So what they do is, for each type of crop, they will specify what the crop cycle is and whether it's a short-term crop or a long-term crop. Where does this help you? So why should I know whether paddy is a short-term crop or not, right? Because the IRAC norms of RBI, which state when an asset is supposed to be marked as a non-performing asset. IRAC means income recognition and asset classification, correct? Sir will be covering that more in the next half. It says when it comes to agri loans and in specific crop and farm loans, if it is a short-term crop, if it is overdue for more than one season, it becomes an NPA. Okay, and if it's a long-term crop, if it is overdue for more than 2 seasons, then it becomes an NPA. So I need to know the SLBC's classification based on whichever state I am operating out of to understand when an agri loan becomes an NPA or not, right? So even an IRAC classification will come under your testing. It is one of the very important areas which will come under your testing as part of your credit monitoring. Okay, another aspect in agri loans, jewel loans. Like I said, when a jewel loan is taken for an agri purpose, a declaration has to be given. All that is fine. Usually a jewel loan is given for a year. Majority of the jewel loans are given for a year. And what happens is, at the end of the tenure of the loan, when it comes to the next year, the borrower will roll it over. Banks, based on their credit policies, will say for agri jewel loans, this is the margin I am supposed to keep based on the market price of the gold. Let's assume, I'll just round it off. Let's assume 1 gram of loan gold is 10,000 rupees today. The bank's credit policy will say, for agricultural purpose, I am supposed to take a 10% margin. And on a periodical basis, the bank will specify what the rate of the gold is supposed to be taken for 1 gram of, say, 22 carat or whatever. Let's assume that the rate given this week is 10,000 rupees per gram. So when a farmer brings in a jewel of 2 grams, I am supposed to take that as 18,000 rupees because I have a 10% margin, right? So the maximum loan that can be given is 18,000, and I give a tenor of 1 year. When I come to the next year, the farmer will say, now the market rate has gone up from 10,000, it has gone up to, let's assume it's 15,000. So let's assume the same 20% margin and the bank's credit policy has not changed. So now what will be the maximum eligibility of loan? It will be 13,500, correct? No, it will be into 2, right? So it will be 27,000. So the farmer will say, I've already borrowed 18,000 from you. Give me 9,000 more because the gold that I have given you is now worth for you with your margin at 27,000. Let me roll over my loan and get more finance from you. He will only repay the interest on this 18,000 for 1 year. He will not actually repay the principal. Last year, RBI came up with a guideline. I don't think this has become a circular or not. I'm not sure, it might have. But the guideline that came last year was rollover on jewel loans is supposed to be restricted. The customer is not supposed to come and say, give me 9,000 more and I'll continue the loan for 1 more year. The customer is supposed to pay back that 18,000 with interest. He's supposed to close that loan and apply for a fresh loan. So these points you will have to check. If I look into the tenor of the gold loans closed during the year, and if I look at the new fresh dispersals that have happened during the year, and if I put a simple VLOOKUP, I will be able to see the customers who have closed that loan and taken a new loan, correct? If they have happened on the same day, then as an audit point, I can ask the manager whether these were actual rollovers or whether money was paid and a new disbursement was made. I can look into the current account or savings account of that customer to see if there was a debit of that 18,000 or not, correct? So these are specific points that you will have to check. Okay. Any other doubts on agri loans before I move on, please? Sorry?
Top-up is not available. Agriculture jewel loans.
Mm-hmm.
Top-up is not available. Like, as in the case, extra 9,000 you could give me, no?
See, a top-up will be available during the remaining tenor of that existing loan. If I take a 1-year loan and at the end of 3 months, I've come and say I need a top-up of a few more thousands based on the increased market price of that gold. Or I can give more gold and either take a top-up loan or a fresh loan. But I can't do that at the end of the tenor. I have to close that loan at the end of the tenor and then take a new one. If it's during the tenor, what you say will be valid. Okay. Sorry? The market value of gold reduces. Now that we are seeing crashes, I understand. That is why the bank has margins, right? So it is not the entire 100% that the bank is lending, right? It has its own margin of 10%. The example that I said was 10%, but practically it will be much higher. It will be around 20-25%. And if gold crashes more than 25% over a year and it does not comes back to its original value or somewhere near that towards the end of that year, gold loans will be our last priority. We will be having other thoughts on our mind, right? So that is one thing. Anything else? Okay. Yeah.
Even now, recently, RBI has introduced silver-based loans. So, is there any differences on how it will give the
Okay, silver-based loans, I am not sure if they are agri-related or because I am not very familiar with the concept. Are they agri or non-agri? Any idea? Sorry? Okay. Okay. Honestly, I am not very familiar with this topic, but I believe if there are directions on this, it would work similar to a gold loan. But since silver is a little bit more volatile, I believe the margins that the banks will have will also be higher. So those will have to be adhered to. Okay. And be it silver or gold, another aspect would be the quality verification. At every agri branch, there will be one guy, a local guy called a pattar. What a pattar means is he is an appraiser. Okay. When you take a jewel to a branch, it is the appraiser's job to check the quality of the gold. And if I give a jewel instead of a bullion, he is supposed to say how much grams in that jewel is gold, because there will be stones and other decorations, right? So how much is the quantity of the gold in the jewel that the borrower has submitted? What is its quality? What is the market rate? What is the margin? What is the maximum loan that can be given? That is the appraiser's job. So when you look into a jewel loan, along with your sanction letter, your end use declaration, your application letter and all, also see the appraiser's documentation. Okay. And for existing jewel loans, like I said about the rollovers and all, you can also have a physical verification of a small sample of the gold available at the branch. That is also an audit practice that you will be able to do. Okay, anything else or can I move? Done? Okay. So apart from agri, we have non-agri loans. And in these non-agri loans, the other classifications will also carry. They can be working capital or term loans. They can be fund-based or non-fund based. So let's go class-wise. If I go for working capital loans, there are different types, right? There can be a cash credit, there can be an overdraft, there can be a working capital demand loan with a bullet repayment. Different types of facilities are there. And when I come to a term loan will have a tenor of at least more than a year. It will be backed by a security, a tangible security. It will have an interest rate and an EMI that is fixed. Either it can be half yearly, quarterly or monthly. So these different types of that. Coming to working capital, what do you think is the difference between a CC and an OD? Generally, even the balance sheet you'll be saying CC/OD, right? So what's a cash credit? What's an overdraft? Any thoughts? Okay. When it comes to a cash credit, it is business linked. Let's say I run a business and I say this is my working capital gap, and for this business to meet this much working capital, I need a cash credit. A limit is given to me of the maximum of the cash credit that I can use, and interest is charged on my utilization. An OD is somewhat similar. It is for a working capital gap, but it might not be business linked. It is linked to the current account or savings account of that particular borrower. I, as a practicing chartered accountant, can take an overdraft based on my savings bank account. I might not be eligible for a CC. Okay, that is a small difference. Now, coming to the appraisal stage of a CC or an OD, what are the specific documents? Guys, one more thing. All these items that I want you to check, they are definitely not exhaustive. I don't think anybody can give you an exhaustive list of what all things that you'll have to check during a bank audit. Paka, you might have to think of new things. New things will come into your mind. You can always, discuss them with your senior and think of other audit procedures that you can take up. Please do that. It will be very useful for you and for your juniors also. Okay. Now, coming to the appraisal related documents for a working capital facility. And let me cover term loans also here. Let's say a borrower comes to me. He says he's been running a business for 5 years. He wants a term loan for getting a new machinery, and he also wants to take a CC facility along with that because he's having a working capital gap. What are the documents that a branch is supposed to have, and what are the documents that as an auditor I'm supposed to definitely check? The first thing is the proposal note. Like I said, a bank is a business. A branch has targets to meet its loans, right? So it has its own approval matrix of putting up a proposal to take it to its higher ups to ensure that the loan is sanctioned. An officer or a branch or a relationship manager at a branch wants to disburse loans. He wants his higher authorities to approve the loans applications that he brings. Correct? So that document that he puts up to convince his higher ups is a proposal. So he will draw. In fact, drawing up of a proposal is another engagement activity that chartered accountants do on a regular basis. Practicing CAs can link up with banks saying, I'll help you in drawing up proposals. I'll help you analyze the financial aspects of the balance sheet of a company. Why don't we work together? These employment opportunities are there. Now, what does the proposal have? The proposal will have a brief history of the borrower, the business that he is in, why the borrower wants a loan, what is the quantum that the borrower wants, and what are the reasons that the branch will want to accept to give that loan, right? And what are the specific aspects that the branch has to be careful of. I'll give an example. Let's say in these 5 years, the party has done really well. He has an ROI of say 12% per annum. The branch will say this is a really good borrower. So let us participate in his business. Let us lend him so that we also earn out of him. What is an aspect that I might have to be careful about? In the past 5 years, he has had 12% ROI very consistently. It generally does not happen. There are business cycles that come into play. First year he might have a loss, second year he might break even, third year he might go up, fourth year he might come up. But there is a very specific trend line that is going on. So there is a case that these documents that we have might not reflect the actual position also. So these indicators either they might be explicitly given in the proposal, or you as an auditor might have to interpret from the financial analysis that you will do. Along with going through the proposal, you will also have to go through the financial statements of the past 3-4 years of that particular borrower. See, every proposal will have a trend line. It will have projections into the future to show that the customer has an earning capacity to repay that loan, correct? But you as an auditor, based on your professional skepticism, need not believe that trend line. You need not believe that the customer will project a 10% growth or a 12% growth every year, because you understand what business cycles are, what economic cycles are. You have seen the audit of several sectors, right? So you know how they might not turn out to be what they are actually on the paper of the proposal. So what you will do, you will go through the past financial statements of the borrower. You will see whether the actual earnings, the actual trend that the customer has had is in fact in line with the projections that are shown in the proposal. You will be able to do your own financial analysis. You will be able to check what the debt service coverage ratio is, what the interest service coverage ratio is. Based on this, you can come to a conclusion as to whether the proposal has been put up with integrity, or if something is there where you might have to get up an observation. Okay, so you will have to go through these basic documents. You will have to, let's say you'll have to go through the GST returns that are filed on a monthly basis. Past 6 months you can see. You will be able to check whether the turnover that is mentioned in the financials is matching with the credits in the bank statement, or with the revenue that is disclosed in the GSTR or in the ITR. So all these sorts of financial analysis you are free to do. The bank is supposed to have done all this. You can also do all of this. Okay, so this is the basic verification that you will do. Once you are satisfied with the financial aspect of this, or you might not be satisfied also, the other documents that you will have to see during the credit appraisal. The first is the sanction letter. The sanction letter says these are the terms and conditions under which this much loan is given for this tenor at this rate at this facility with X security, X primary and Y collateral security, with these promoters as the guarantors. All these are mentioned in the sanction letter. There are few conditions that will have to be followed. They are called mandatory covenants. Covenants means conditions. There are some conditions that the borrower is definitely not supposed to follow. They are called mandatory non-covenants. They are like do's and don'ts. Okay, so you are supposed to go through all of these points in the sanction letter to ensure that they have actually been adhered to. So this will be your link between your credit appraisal verification and your credit monitoring verification. When, let's say, the sanction letter says that a mortgage deed on the primary land, collateral land security is supposed to be created within 3 months, you can now go and check whether the mortgage deed was in fact registered within 3 months. Okay, so these are areas, this will serve as a checklist for you in your audit to see what areas that need to have been done, what ought to have been done, and whether they have been done or not. Okay, all this is available in the sanction letter. So proposal you've seen on the related financials and other documents. You will see in the sanction letter. You will also see, for example, the net worth certificates of the guarantors. There can be a collateral security given by a group company. There can be a personal guarantee given by the promoter. What happens if the promoter is a pauper? If the company has a debt equity ratio of say 10:1, right? The net worth certificate would be 0, correct? But still the bank might have taken that as a security, and you as an auditor might have to question it. So all these documents are available at the credit appraisal stage itself, and you'll have to go through. Now, coming to the credit monitoring stage. This will be a little different when it comes to term loans or to a working capital. A term loan will be a little bit more easy. You know what the tenor is, you know what the monthly EMI is, you know what the interest rate is. And like when I went through the schedule 3, I said you will have to do a recomputation of the interest income on a sample basis, correct? Apart from that, you will have to see whether the EMI is serviced on a timely manner. Just a small segue here, sir will be able to cover this more, but let me touch upon what IRAC norms is. Okay, basically I'll tell you when an asset is supposed to be downgraded, and it will be helpful for you to check into these audit procedures if you know what IRAC norms are. You all know what a non-performing asset is, correct? When does an asset become a non-performing asset? The basic rule is when the overdue is beyond 90 days. For a term loan having a monthly EMI, if the EMI is not paid for 3 months, then the 91st day it downgrades into a non-performing asset. Okay, this is the very basic rule. There are several other definitions of NPA given under the prudential norms of RBI, like when an agri loan becomes an NPA, when working capital or a CC loan becomes an NPA, what happens when the DP is beyond the limit and the overdue is beyond the DP. All these are covered. I'm sure sir will touch upon all this, but you need to know this. Now coming back to my credit monitoring verification of a term loan, if I see that an EMI has not been paid for 90 days, but it has been paid on the 100th day, okay, the entire EMI has not been paid, only the first EMI has been paid on the 90th day, the second and third EMI are still pending on the 150th and 120th and 150th days. The first EMI was paid, correct? Before 90 days lapsed in for the second EMI, my 31st March cutoff came. So what do you think will happen? The overdue as on date is not beyond 90. You understand my example, right? The first EMI was overdue for 90 days. It was paid on the 100th day, but the second EMI is still overdue, but 90 days is not lapsed. But my 31st March cutoff has come. What do you think should be the classification of this loan? $90 overdue is not there, so it has to be standard. But he was NPA at some point. So, Ippo on 31st, what is he? It's a 50% chance of you being right, so tell something. Sorry? Performing. Why performing? Period is not there, right? This was the rule before, but a few years back, post COVID, I believe in 21 or something, no, it was November 23, the RBI came up with one circular saying, when an asset downgrades into an NPA, for it to upgrade, all of its overdues is supposed to have paid, right? So on 31st March, it was an NPA on February 15th, on the 100th day, but 31st March came up, it had overdues which are not fully paid, therefore it continues to be an NPA. Now there can be cases where you look into AS4 and say post 31st March all the overdues are paid and therefore now I'll call it a performing asset on 31st March. Now that becomes an area of interpretation, but the basic RBI rule says unless the entire overdues are paid, an asset will not be upgraded. Okay, so this is one point. Coming back to our credit monitoring, you've seen the ledger scrutiny, you've seen that the EMIs are paid on a prompt basis. You also saw the sanction letter at the credit appraisal stage, correct? Now, let's say one of the mandatory covenants in the sanction letter was for the customer to give a quarterly receivable certificate approved by the auditor. Okay, if I go back to my onward lending example, let's say this is not an agri loan, or even if this is an agri loan, and the NBFC is supposed to give a quarterly receivable certificate saying all the underlying receivables are agri and the receivables cover the loan outstanding, because my security has to be 100%, correct? So you as an auditor during your credit monitoring have to check for these quarterly receivables. Every certificate has to be checked and you have to see if the receivables amount is at least the security required amount, whether it is higher than the outstanding of the term loan. Another aspect could be your insurance policies. Let's say I get a term loan for buying a plant and machinery. So one of the covenants will say that the plant and machinery has to be insured, with the sum assured being at least the value of the plant and machinery as per its book value, correct? And an insurance policy will be there only for 1 year, correct? So there has to be renewal of that insurance policy, which the branch has to get from the customer and keep it on records, and you have to check for those documents. Similarly, there can be inspection reports. The sanction letter could say that the branch official will inspect the plant and machinery on a regular basis. So you would have to see those inspection reports. The branch is supposed to get annual financial statements even after the credit appraisal to ensure that the company is doing well and the DSCR and ISCR are continuing. to be as per their whatever the branch deems to be ideal. So these financial statements you are also supposed to get during your credit monitoring and check. Seriya, this is for the term loans. When it comes to CC and other working capital loans, one aspect that you can check is same, this financials, ITR, GSTR, all that you will see. A very specific aspect that you will see for working capital is the stock statements that is provided. Generally, for a working capital gap, stock and receivables is given as the security, correct? Now, when I take a term loan and going by the same example, it is for purchasing a plant and machinery, the cost of the plant is fixed throughout the tenure of the loan, correct? But when it comes to a working capital gap, by the very definition of working capital, it is not fixed, correct? Across the tenure of the facility, the working capital requirement will keep changing on a monthly basis. It changes every day, but it is deemed to change at least on a monthly or a quarterly basis, correct? Which means the amount of loan that the branch has to sanction, or the limit that the branch needs to cap on the facility will also have to change on a periodical basis. It can't say your working capital gap at the appraisal stage was 5 crores. So I'll continue to give this 5 crores as a working capital gap throughout the tenure of the facility. That does not happen for a CC or an OD. It happens for a working capital demand loan. Okay, there is a facility called a WCDL, okay, which is a working capital demand loan where a lump sum amount is paid to the borrower, and it has a bullet repayment facility after say 6 months or a year. It is less than a year. It can be 9 months, 10 months or a year, right? But if it is a CC or an OD, we understand that the working capital requirement changes periodically. So how does the borrower state what his working capital requirement is for the next upcoming period? That is through a stock and receivable report. Okay, so this stock and receivable reports periodicity is mentioned in the sanction letter. It says every month before say the 10th of that month, you are supposed to give your stock and receivables. Based on that, the branch will compute something called a drawing power, DP, and that will be the limit of your facility till the next stock statement is provided. So what this DP is? Going by our same example, the working capital CC facility given is for 5 crores, right? That is the maximum limit which the branch has approved for that customer, correct? The monthly DP computation that borrower has, 1 month it could be 4 crores. So for that period, whichever is higher, the DP or the limit, that will be the maximum borrowing that the customer can do. If his DP computation works out to 4 crores, 4 crores is what he can draw out of his CC account. If it comes to 6 crores, 5 crores is what he can draw because his limit itself is only 5 crores. Okay, so what are the contents of this stock statement? How is this DP computation done? These are also mentioned in the stock statement. No, sorry, in the sanction letter. Like the name goes, it has stock, it has receivables. Basically, your stock and receivable will work out to your working capital gap, correct? Wrong. Your stock and your debtor will work out to your current assets, not your working capital. Well, your working capital comes after you reduce your current liabilities, correct? So, your DP computation should also have a reduction of your current liabilities. You have stock and you have debtors at the top to show your current assets. You are supposed to reduce your sundry creditors so that your working capital is derived. Now, there can be a possibility that the borrower also has a bill discounting facility. So, if he say has debtors of 1 crore, about 60 lakhs could have been discounted with the branch. When it's discounted, that debtors are already paid off by the branch, correct? Which means those 60 lakhs are not part of the working capital requirement of that borrower, correct? He need not be funded for that 60 lakhs again because he's already gotten that discounted, right? So these debtors which are already discounted need to be reduced. Similarly, there can be a case where he has gotten advances from his customer. Why are advances from customers taken by a business? To meet their working capital, right? If I run a business and someone places a huge order for manufacturing a machine I take an advance to say, because sir, I have working capital requirements, I'll have to purchase raw materials, so please give me an advance. That advance from customer meets the working capital requirement of the borrower, correct? Which means those are already funded and need not be funded again by the bank, right? So this advance from customer also needs to be reduced in the DP computation, so that you ensure that there are no double funding. Usually there might be some advances from the financial statements. You can understand that there are AFCs and there are bill discounting facilities. They might not be reflecting in the stock statement. You would have to point these things out. Okay, so computing this DP, you get the stock, you get the receivables, you reduce the discounted debtors, the advance from customers, the creditors, you get the working capital requirement. Now, not the entire working capital requirement will be funded by the branch. There will be margin requirements. There has to be a promoter stake, right? For every single project where the loan is given, there has a margin stake, right? So similarly for working capital also, even in the CC and DP computations, there has to be a margin that is reduced from the working capital that you draw, that you derive. Let's say it's 10%, 15%, whatever. That's mentioned in the sanction letter. After reducing that, you get what is called the drawing power of that particular borrower for that CC facility for that month. Okay. Now you compare what the DP is and what the total limit is, and whatever is the lower amount will be the maximum cap that the CC should have had. So when you do a ledger scrutiny of that particular advance, you must see that the total debit balance in that month has not crossed this limit of whichever is lower between the limit and the DP. Okay. Another aspect that you will have to see, I might have, me being the borrower, might have some long pending debtors. I might have some stock which are non-moving, whose market value has dropped, but that has not gone below my cost, so I continue to show it at cost in my books, but they are pending in my books for more than a year. That stock is not going to be sold. It is not going to be converted into cash for the bank, for the customer to pay to the bank. Similarly, the long pending debtors, the customer is not going to recover and he is not going to use that money to pay to the bank, correct? Because of this reason, the sanction letter will also state aging restrictions on the stock and receivables. It will say 90-day stock is only supposed to be taken. 75-day debtors is only supposed to be taken. So in the DP computation, you are supposed to check that only 90-day stock is taken and long pending stock is not taken. How do you do that? How do you ensure that only 90-day debtors is taken and debtors that is beyond 90 days, say 120 days, is not taken? How would you know whether the total debtors as per the books has first of all been stated in the stock statement? The stock statement is submitted by the borrower, correct? He might only give what is the debtors within 90 days. You will not even know whether more debtors are included in his financials or not, correct? So the branch has to ensure, and therefore you as an auditor should also ensure that the entire debtors and the entire stock has been included in the stock statement. You are supposed to match it with the financial statement, the latest audited financial statements and the projections that are available to ensure that the total amount is disclosed. It is given as per your aging bucket, 0 to 30, 30 to 60, whatever, and only up to the period that is mentioned in the sanction letter is taken for DP computation. Now, this is very similar to how you show your aging analysis in your Schedule 3 financials. For trade payables, trade receivables and all, we show 0 to 1 year, 1 to 3, 3 to 5 and more than 5 and all, right? So, this is similar. So, one thing which I check when I finalize the financials is, last year, X amount was mentioned as receivables from 2 to 3 years. So, I can see that the maximum more than 3 years debtors in this year has to be 2 to 3 of last year, correct? So this I will check when I do a financial statements. Similarly, when you see a stock statement of 3 or 4 months together, you will be able to see this movement. If I show, say, debtors of 1 crore, which are there from 30 to 60 days in February, in March, I cannot show 2 to 3 months of more than that figure. Then it means something is wrong, correct? This type of analysis also you can do in the stock statement. So this is to ensure that the DP is properly and accurately computed and there are no unnecessary overdues that will come into picture. Okay. Any doubts on this? No, good. So I told about ledger scrutiny during credit monitoring, right? I touched upon it for term loans. When it came to working capital, I told you about the documentation that you'll have to see during your credit monitoring stage, right? When it comes to ledger scrutiny in credit monitoring for working capital loans, what are the things that you'll have to check? I will give you some examples. I cannot give you an exhaustive list because scrutiny nale what you guys see. I can give you some examples of indicators of observations that you might pick up on when you scrutinize a CC account. First thing is this: the interest is supposed to be repaid on a monthly basis, correct? That is mentioned in the sanction letter. The mandatory covenant will also say that all the revenue of that borrower is supposed to be routed through this CC account. It need not be that the customer can have facilities in 2 or 3 different banks. That is not allowed as per the latest RBI regulations, right? So, but there can be cases where the total credits in a CC account will not match with the revenue that is stated in his monthly GSTR. Okay, so you will have to cross verify these documents. There can be cases where the customer, even though he is supposed to repay his interest at least on a monthly basis, right? He wouldn't pay till 3 months. He would pay it on the 89th day to ensure that it does not downgrade, and he would take that amount back to his current account on the 92nd day. So the account would stay as a performing asset. Although it is an overdue, it would not slip into NPA because he rotates this amount exactly on the 90th day. So this is an indicator that the borrower is not using the funds in the way that he is supposed to be intending it to. Okay, so these are indicators that you can check. Now, you can cross verify the ledger scrutiny of CCs and term loans together. You are not supposed to use your CC facility to repay your term loans, correct? So whenever an EMI amount is credited to the term loan on a monthly basis, you are supposed to check from where this account has come from. It is supposed to come from the current account of the party. It is not supposed to come from the CC. Even if it does come from the current account, you have to ensure that there is not a credit in the current account from the CC. He might have routed it from the CC to the current and then from the current to the term loan, right? So these aspects you will have to check. Why? Why is it that the customer is not supposed to use a CC facility to repay a term loan? Give me 2 reasons. Thoughts? Okay, the first thing is the CC was supposed to be used for working capital purposes. Repaying a term loan with a CC is not a working capital purpose. That is basic. The second thing, there is a reporting in your CARO. I believe, not sure of the point number, I believe it's point 9. A short-term facility is not to be used for a long-term purpose, correct? I can't take a CC to buy a plant and machinery, correct? So how is it that I can use a CC to pay an EMI for a single term loan? That should also not be done, correct? So this means there is a diversion of funds. So these are points that you can pick up on during your credit monitoring's ledger scrutiny stage. Okay. Another example would be documentation of term loans in your credit monitoring. I said there would be inspection reports, there would be insurance policy renewals that are taken place and all, right? Similarly, for stock audits, when the limit is beyond 5 crores, RBI has prescribed stock audits to be done. Not just stock statements that are submitted, but they are supposed to be audited by the branch. They are supposed to visit the factory or the premises, look at the stock. This could be done by the branch officials, or mostly it is done by an empaneled list of auditors. This would be outsourced to an auditor who is supposed to do the stock audit to ensure that the stock statements are in fact true and fair, correct? So if the facility is beyond 5 crores, you can look into periodical stock audit reports that are submitted by the borrower to the branch. So this is another area that you can see. Now, I touched on something called a WCDL, right? Working Capital Demand Loan. Although it has a bullet repayment, the tenor is less than 1 year and it is treated as a working capital facility. That is true. But in this aspect, RBI has given one guideline saying when the working capital exposure of a party is beyond 1500 million. 1500 million is 150 crores, right? When it's beyond 150 crores, there has to be a loan component of at least 40%. This used to be 60, now it is turned to 40. So the other than loan component has gone from 40 to 60. What is this loan component? Loan component is the WCDL. Other than loan component is the CC facility that he can draw. This aspect is important because it is not 40% on the outstanding. It is 40% on the limit that is sanctioned to him. So let's assume that a party has been given a limit of 2000 crores. It means at least 40% of that 800 crores is supposed to be kept as WCDL. Let's assume out of that 2000 crores, he has only utilized 700 crores. He's not even taken 800 crores. So out of this 700 crores, 40% should be WCDL, which is 280 crores, and 420 is supposed to be CC. Correct? Wrong. I said 40% on the limit, not 40% on the outstanding. Correct? 40% on the limit is 800 crores. So if I have an outstanding of 700, the entire 700 is supposed to be WCDL. There has to be no CC component at all. Once the outstanding goes beyond 800 crores, I can have a CC component. So up till the borrower utilizes at least 40% of what his sanction limit is, he is not supposed to draw CC at all. He is only supposed to have a working capital demand loan. So there might be interpretation issues on this that you will have to pick up on. Then what else? Okay, the other aspects that I have covered here, you will have to see the repayment pattern, servicing of interest. This is usual stuff. Okay. This board resolution point, it's become this usually was not as much in requirement as it was before, but with the new Companies Act and with the RBI giving more training to the staff, they are also started to demand board resolutions here. If it's a company and it takes a borrowing, there would be a board resolution. Correct? Usual stuff.
40% is it, sir? Out of the entire limit, 40%, like how this, until and unless you are utilizing that 40%, you can't get a CC loan.
Correct.
After the 40% is used, you can get a CC loan.
You can take a it is not like you want to open the account. Your outstanding 40% of your limit has to be in WCDL. Let's say your outstanding is 1000 crores. Out of the limit of 2000, at least 800 has to be WCDL. The 200 you can have a CC. You can decide to have the entire 1000 as a WCDL. That's okay. Prida or
Like 40% you should be having towards the
working
working capital.
capital demand loan, a loan component. It can't be a CC because out of the 1000 crore outstanding, let's say I have 900 crores as CC, it means the bank will not know how much of advances it is going to have the next month, right? If it's a loan component, the bank can work on its asset liability mismatch. An ALM can be done based on the loan component only. It cannot be done on a CC facility. Correct? So that is one of the reasons why this was brought into picture. Another reason is the RBI wants the customer to actually have a WCDL in place and not play around too much with its stock and receivables also. Yeah. You're clear or can I elaborate? Right. Yeah. Coming to the resolutions. If it's a incorporated entity that is having a borrowing, there would be a board resolution. When will there be a special resolution? Which section under Companies Act wants a special resolution on borrowings? $180? 5, yeah? 6. Who said 6? Numbers. It's 180. See, section 180 gives restriction on the powers of the board. It does not apply to a private limited company. It applies only to a public limited company. Correct? So, restriction on powers of the board, one of them is the power to borrow money from financial institutions. Restrictions are placed. When will a restriction come into picture? When the total borrowings of a company, existing borrowings and the proposed borrowing goes beyond its share premium, share capital and free reserves. Basically, when the debt equity ratio goes beyond 1, there has to be a special resolution passed by the company. It will not include certain borrowings. It will not include borrowings which are to be paid within 6 months. It will not include a small CC component and all. But if a company goes for a term loan, right, so there has to be a special resolution place if this debt equity ratio of 1:1 is breached and it's a public limited company. If it's a special resolution, it also means an MJT 14 will have to be filed, an ROC record will be there, and that also needs to be checked by the branch. Since I touched on ROC records, another point that an auditor has to check is the what? Charge. The CHG1 that is supposed to be filed by the company. Now, filing of CHG1, the onus is on the borrower, correct? Because it's the borrower's asset that is hypothecated. So it is the borrower who has to ensure that his members are properly informed that their asset is hypothecated. We understand. The onus is not on the bank to file a CHG1. But still, a bank has to ensure that a CHG1 is filed so that it has a claim on that hypothecated asset in the future, correct? So for that reason, the auditor also has to check whether a CHG1 has been filed. And whenever there is a modification in the terms, when there is a renewal in the term loan, but the underlying hypothecated asset is the same, but the value changes, a CHG9 has to be filed for a modification of a charge. Whenever a loan is closed and the borrower goes for a CHG4 for a satisfaction of a charge, again the onus is not on the bank to ensure that a satisfaction of charge is filed. Because let's say I am a bank and you are saying that one of your assets is hypothecated to me and you are not filing the satisfaction. Why am I bothered? I'm not bothered. But when the customer comes and asks for an NOC, a no objection certificate or a no due certificate, which is supposed to be given as an attachment to the CHG4, you as an auditor have to ensure that the NDC was given when it was actually true. When there is a small interest portion of the last EMI that is pending, the bank is not supposed to give its NDC. Correct? So for all the loans that were closed during the audit period, these sort of closure documents are also supposed to be checked. You are supposed to check the NDC to ensure that the CHG4 was properly filed. You are supposed to check that the closure letter was given. Whether see, what happens is sometimes when a hypothecation deed's original copy is given to a bank, it will be having a custodian certificate. The bank will give a custodian certificate to the borrower saying, I have your land document with me. Correct? So when the custodian certificate is given back, when the land document is given back, you are supposed to ensure that it was done only after all the closure proceedings are properly over. Okay, so in your sample, you are not only supposed to check for fresh disbursements, you are also supposed to see the procedural aspects of closed loans also. So ensure that your sample is universal in this manner. So your population, because when you get a list of advances, you are getting a list of advances as at 31st March of that year. It will not include the loans that were closed in that year, correct? Obviously. So you would have to get the list of the last quarter or the last year, put up a VLOOKUP and see what were closed during that year. அதுவும் நம்ம சாம்பிளை செக் பண்ணணும். ஓகேவா? ரைட். Again, some more procedural aspects are there, like reporting to CRILC, checking of CIBIL data, checking of FIBIL data, your credit score and all that. You can please do go through your bank audit guidance note. It's a 922-page document. I had to go through it to prepare this PPT, so I want you also to go through that. I won't call it, I don't want to use the term, but I want you guys to go through that. Okay, it will be really useful. Your bank audit guidance note will be your Bible. Ekkachaka interpretation issues will come when you go through your master circular. You can always rely and you are supposed to rely on your bank audit guidance note because you work under the auspice of the ICAI. So, paathukonga. Right. Investment. We have about 10-15 minutes, so I'll touch on investments. Now, you would have seen investments from a company's point of view. Okay. Okay. Before I move on, advances le doubt Srika, something that I can clear. No. Coming to investments, when you audit a company and it has several different investments, what sort of investments do you think that a company can have? Shares in other companies? Sorry? Bonds. It can have corporate bonds, deposits, it can have mutual funds, correct? Similarly, the bank can also have its own investments. Now, think of the balance sheet of a bank. It gets its liabilities from different sources. It gets loans from RBI, for which it pays the repo rate. It issues its own corporate bonds. It issues NCDs. It has preference share capital. It gets loan from the government. If it's a listed bank, it has a share capital from the public. Ellame it's there in the liabilities. On the asset side, not all of the assets are given out as loans. Not all of the assets are supposed to be given out as loans also. Correct? There would be excess funds that have to be parked as investments. There can also be a specific decision to invest in certain areas. Correct? But since public money is involved, RBI comes up with restrictions on the nature of these investments. It would give sectoral caps. It would ensure that concentration risk is not there. It is not like if a bank has 50,000 crores of investment, about 45,000 crores should be kept in one single bond or one single mutual fund. These cannot happen, right? So there are restrictions proposed by the RBI on the investment part. So this is a pretty niche area, and not the possibility of you guys looking at an investment portfolio of a bank is quite minimal, but it is useful to go through these items. It is also there in the bank audit guidance notes. Now, the sectoral caps is on one side. Coming to the other aspect would be their classification. This is similar to how it is done under your Ind AS. It can be a HTM, held to maturity. It can be available for sale, or it can be what? Can be held for trade. Okay, so the classification needs to be properly checked, because similar to Ind AS, whether the movement is shown as a mark to market or a cost, and whether the movement is taken through the P&L or through the investment reserve, these items will have to be checked. So this, I won't touch too much on this because you guys already know this from your Ind AS portions. Now, another aspect will be the existence and valuation of the investment. When I do an audit of a company, you said it can have investments as mutual funds, bonds and all, right? For each of these investments, I get external direct confirmations. I get confirmations from the custodian or the mutual fund house stating that that company has this much investments and this much units, correct? Similarly, you are supposed to do that for banks also. Banks will have GSEC, government securities. It can have bonds. It can invest in T-bills. It can also have investment in its own group companies, correct? In all these cases, you are also supposed to get direct confirmations from those custodians and from RBI and from the government stating this is the value of the investment as on 31st March of your reporting year. So whether that is matching with the books, this will ensure valuation because it shows you the market value and it also gives you the confirmation of its existence. Okay, pretty basic stuff. Then okay, this is fine. You know what audit opinions are. So you're supposed to give a modified, unmodified, qualified, whatever. The format of the audit report will be somewhat similar to SA 700. Okay, but there are some deviations. There are additional reporting requirements that are required by BRA and by the RBI. Okay, those points are also supposed to be included in the audit report. There are some exemptions that you will have to take when you are a branch auditor. For example, when you looked at the balance sheet schedule 3 of BRA, one of the items was the HR expenses. One of them was depreciation expenses. Invariably, the branch manager will say, we don't look into HR, it is centralized. We don't look into the depreciation workings because it is centralized. So how are you supposed to check? How can you give an opinion on those aspects? You can't, correct? So you are supposed to take an exemption for those areas. And then you are supposed to give an other matter paragraph on the fact that you have taken exemption on these areas. So in this way, the format of the audit report would be a little different, and they are also given as part of annexures of your guidance note. Okay, so guidance note la the format of your engagement letters, your MRLs, your audit report, all of them are given. Please make sure you adhere to them. Go through them and then make sure you adhere to them. Okay. This is the last part. This is a little bit theoretical and based on disclosure. So I'll see what can be done here. Risk management. Banks deal with public funds. Correct? That is, and they are very complex. Adanala we are doing this bank audit seminar because it is tough to do a bank audit. When they deal with public funds, you are supposed to manage risk. Why? Correct. Risk means uncertainty. All these types of risks can affect a branch. There can be a credit of a bank. It can be a credit risk, investment risk, market risk. These are similar to what you disclose for financial instruments in your India's financials. Correct? There you give market, credit, interest and liquidity risk. Correct? Similarly, for branch, there are about 22 to 23 different types of risks which are mentioned in your bank audit guidance note. Some of the major risks are this. To ensure that the bank is not, it will be affected, but because it's a risk, but it's not affected too much, to ensure that the risk is managed, there are certain aspects that each bank has to do. These are stated by an organization called Basel norms, BASCL. You will come across this term when you see a financial statements. Now, Basel norms 1 was there, and then Basel norms 2 came in. The latest version is Basel norms 3. These are international guidelines of risk management, and similar to how international accounting standards with some carve-ins and carve-outs there was Ind AS, RBI has also adopted these Basel 3 norms, but the majority is aligned. They are not different. Now, what are these Basel norms? They are basically, I wouldn't say instructions, but rather guidelines to ensure that all these risks are managed. Correct? They are managed based on 3 pillars. The term pillar itself is used in your guidance note. What are these 3 pillars? First one is capital adequacy. A bank, to ensure that it stays liquid at all times, has to ensure that the minimum capital requirements that are stipulated by RBI are maintained at all times. That is first pillar, capital adequacy. The second thing is ICAP and SRP. ICAP means internal capital adequacy assessment process, and SRP is supervisory review process. Who is the supervisor for banks? RBI. Correct? So, a bank is supposed to have its own internal process of ensuring its capital adequacy is mentioned. This is supposed to be there in a board approved policy. Okay, so the bank, like I said, the inspection report, the concurrent report, the exception reports, all that is part of your ICAP. Ademari, there can be RBI's inspections that are happening. That is part of your supervisory review process. So, based on these internal inspections that a bank does, and based on the inspection that the regulator does, the second pillar is formed for ensuring that the risks are not materializing too much. The third pillar is mandatory disclosures. From Schedule 17 that I stated from the master directions on notes to accounts of financial statements, all those disclosures on asset liability management, the different ratios, the sectoral caps, the movement of provisions, all those disclosures are made to ensure that the users get proper economic information. Correct? So, based on this also, the bank will ensure that not an unnecessary investment risk is put up on the bank side. So, all these 3 pillars are supposed to be there. Idila first one, minimum capital requirements alone are part of the disclosures itself that you will have to see, because there is something called CRAR. Correct? On risk weighted assets. What are risk weighted assets? In the entire balance sheet of a bank, there will be a weightage that is prescribed for each class of asset. Like for example, for investment that a bank has done in the central government, it is good to say that the risk is 0. Correct? So, the risk weight for government investments would be 0. For the cash that the bank holds on its own, or that which has been deposited with RBI, the risk could be 0. But for an unsecured loan that the bank has given, the risk could be higher. Correct? It goes to say it could be 100%. There are some weight classes which go beyond 100 also. Correct? So, based on the risk weights that are prescribed, a bank will compute what its risk weighted assets are. So, that would show what it would be a weighted average of its balance sheet total. Okay. When I get that RWA figure, these minimum capital requirements which are prescribed under the pillar 1 will have to be ensured. See, the first one is minimum common equity, right? So, And if you look at the third or the fourth one, there is an additional tier. Fifth one is minimum tier 1. These are different capital norms which are supposed to be maintained by the bank. Each head here has its own inclusions and exclusions. If I take minimum common equity, I am supposed to take the paid up share capital and free reserves. If I go into the additional capital, I am supposed to take non-cumulative preference shares. I can take cumulative preference shares under a different cap. So under each definition, I will take what the equity or rather a bank's promoter's funds is. I take that as a numerator and the risk weighted assets of a bank as the denominator, and I get the minimum percentage of RWA here. Only if these items are met, it means that the bank is in line with the stipulations of RBI. If not, there are restrictions on its dividend payouts or the further investments that it can do. Okay, so to ensure that the risk is managed and the pillar 1 is properly met with, these computations are there, and these are all part of the disclosures. If I go to the master directions on notes to accounts for public sector banks, one of the notes itself is on CRAR. Okay, so when you check the financials, all these workings will have to be checked. To ensure that these disclosures are right, at a statutory branch level, there can be certificates that you are supposed to give. You might have to go into the balance sheet, ensure that the percentage of risk weights as per Basel III is properly applied, and that branch's risk weight is supposed to be reported to the bank. The capital need not be disclosed because the branch won't have capital. It will have a head office account, correct? So, but this denominator will have to be reported to the central statutory auditor, and you as a branch auditor will have to certify on that. So, knowing these CRAR norms will help you at a branch audit level also. Any thoughts on this? Any doubts here? Please. No, it cannot be satisfied because the branch won't have a capital. No? It won't have an equity part. Correct? So there can't. But it is at a bank level now. Right? Where are okay. Guys, I think we'll close with this. There was one small aspect that I forgot to cover during my agri loans. I'll just cover on that just for 2 minutes. It is called interest subvention. Okay, it is a very important topic because there will be certificates on this. Apologies for not covering it earlier. See, interest subvention abdina, when a farmer comes to a bank, RBI wants that bank to ensure that all farmers are properly funded. Correct? That is why there are PSL norms. Similarly, RBI, the government of India, both of them have also stated that there should be certain benefits that pass on to the farmer. The interest rate that is to be charged to the farmer is supposed to be capped. And if I do that cap, there will be subventions and reimbursements that happen from the government to the bank. That is the interest subvention. Okay, I'll just touch on this because we are running late. Now, there are 2 specific subventions that you can see. There are more subventions that you will see based on animal husbandry, dairy farming, etc. But the basic 2 one is on farm loans, where if the interest rate is capped at 7% and the borrowing limit is capped at 3 lakhs, then there is a subvention of 1.5% that the government will pay to the bank. For this, the branch auditor is supposed to give a certificate saying these are the list of farm loans where the interest rate is below 7%, where the cap is at 3 lakhs and 1.5% subvention can be claimed. This is a very, very important certificate, and we've seen a lot of case laws also in the past, because what happens is the bank will actually charge say 9% or 10% and then say only 7% post charge, or the branch will charge 8.5% to the customer in 25-26, and it will say once I get the 1.5% subvention reimbursement from the government, I will pay that back to the borrower so that he is netted at 7%. This could be an interpretation point that the bank puts forth, but this is wrong. As per the circular, the initial interest rate itself is supposed to be at 7. It is, and the 1.5% is supposed to come to the bank later on. It is not like that the borrower has to pay and then get reimbursed from the government. It is the bank that is getting reimbursed, not the borrower. Okay, so this is one aspect, just keep this in mind. Another is a subvention on prompt repayment. Prompt repayment, when without an overdue, when a farm loan is closed, where there is a 1.5% subvention, a 3% further subvention is given to the farmer, not to the bank. So the effective interest rate of that loan comes to 7 minus 3%, 4. Comes to 4%. Correct? Inga, what are the things that you have to see? Similarly, eligibility norms are there. 3 lakhs the maximum and all. And prompt repayment should actually be there. You have to ensure that the loan account has a credit on the due date. Okay. And the important point is this 3% subvention is supposed to be credited to the loan account at the end of the year. The certificate that you will give will be in the month of April 26. Correct? It is submitted to the government, say in May or June 26, and only later on the bank will get reimbursed from the government. But similar to my 1.5% example, it is not that the government gets that money and then refunds to the farmer. That 3% should have been credited then and there. It will be a reduction from the interest income in the P&L of the branch of that year itself. So the total amount that is credited will be the certificate that you are issuing. It can't be a case where the 3% is computed, you certify, you get the reimbursement and then give to the farmer. That cannot take place. Okay, since this is a certification aspect, please do keep this in mind. Done. Thank you. Any questions that I can close on or something, or we'll move on? Right.
Thank you so much, sir, for sharing your knowledge and experience with us today. It was truly a pleasure listening to you, and your insights have definitely left us with a lot to learn and reflect upon. And thank you everyone for your participation. Let's now break for lunch, head towards the dining area and recharge yourself for the next engaging session. Thank you.
Good afternoon, everyone. It's a pleasure to introduce CA Ravishankar sir, whose journey reflects both excellence and enduring commitment to the CA profession. Qualified as a chartered accountant in 1987 and become a partner at G. Balu Associates within a year. He has built a career spanning decades of depth and impact. He has a rank holder with All India Rank 1 in DIRM and All India Rank 8 in DISA. His academic achievements are impressive and his professional expertise. He specialized in direct and indirect taxation, including transfer pricing, and has represented matters before various appellant authorities within a special interest in NGO and trust taxation. From his earlier days as an article clerk to now serving as an engagement partner for a public sector bank, his journey in bank audit is both extensive and inspiring. A peer reviewer, ICAI, and a regular contributor to seminars and webinars, he contributed to shape and share knowledge within the profession. We are truly privileged to have him here today. Let's give a warm welcome. Welcome, sir.
Good afternoon. Not loud. Thank you. I thank Dean Ma'am. I thank the SICASA, SIRC, FICAI for giving me this opportunity, and I thank Renuka for a nice introduction, and I thank all the management committee of SICASA. So you have a wonderful session. You have organized a bank audit. The first session was beautifully taken. Excellent introduction of bank audit, insights of bank audit. So once he was speaking, so a lot of thoughts came to me. So before I start the bank audit, I thought I'll just give my own experiences. Not he has beautifully went into it. Some experiences to share so that it will be lively to start with rather than go with the IRAC norms, which probably will be too theoretical. So I thought I'll just liven it up. This will be the main area which I'll be touching upon. The perspective, what is bank audit? That's where probably I'll be touching all my thought process. Then the main IRAC norms on the NPA management. Then restructuring, again in IRAC norms. What is restructuring? Then I'll try to touch upon if time permits, on audit documentation, my experiences, what as article clerks, as an audit team, which you should be asking the bank branch, what you will be doing the audit, and finally the LFAR. So that should be a big session. So I'll try to touch upon all these aspects. That is my plan. Bank audit. What is this? Okay, first before that I want to know how many are new to bank audit this year. Good. So many. So you have your firm's bank branches allotted. Anyone central audit? All are branch audits. So whoever has raised their hands, probably you are doing the branch audit from April, correct? Right? Okay. So then that case, my presentation will definitely be there because I put some basics into it. I'm not gone into very technical. So I'll just put on some basics issues. Little bit of theoretical will be there. As Srikaanth sir said about that when you go to a branch, you'll be meeting a person who is definitely like your father there, opposite to you. It's much more than that also. So they'll be on the verge of retirement too. So that is the thing. But if you go to north side, and if the advances size of the branch is around, you can say 2,000, 3,000, up to 20,000 branches where it is, we can see a lot of chartered accountants in that. I've seen lot of chartered accountants. I was surprised how CAs entered into banking sector. Really surprised. They were into MIS areas. They were really into MIS areas. Advanced verifications where a lot of the analytics to be done. They are into that area. Going into RBI circulars. So they were into that. So when I was auditor, when I visited Delhi Connaught Place, in that branch, there were 3 chartered accountants sitting in the same branch. And if I have to take up a particular IRAC norms and go into it, before I start that particular item, as in those years asset quality and all was there, 444A, all those things were there. When I used to say 444A, this advance, sir, this is the circular. No ma'am, this it's a 500 crores, then only it will come to it. No sir, that has been changed. Immediately you will get an answer. The moment I go and ask them something, when I come back to my seat, it will be on my IP address. The information, sir, I already uploaded. Everything is there. That sort of commitments they used to have. Of course, that is much more than the north side. A little bit lacking in the south side. We don't have much CAs coming into it. But since a lot of people move out, when I go to south branches, we have only North Indians CAs. They are sitting there. So a lot of CAs, they do analytics, especially the GSTs. GST and all completely handled by chartered accountants in the bank head office. So a lot of opportunities. They find it very liking. They move easily to branch, NBFCs, like that, just move on. So it's a very good area. So they are there. They are coming slowly. And as far as the appointment of chartered accountants for branch audit, I think you have mentioned that software, APA, something like that, no? Something you have mentioned that you mentioned. I thought that was the software you're mentioning. See, now the branch auditors, central auditors are appointed as per the bank's perspective. They take up the appointments of auditors, firms. Whatever they want, they will take. So there is no question of any regulation by the RBI or something like that to appoint central auditors for a bank. But as far as branch auditors, the list is given once originally taken up from CAG. RBI takes it, then throws the list to banks. So bank will make a choice out of that list given to them. And wherever there is an existing auditor, he has to be given for 4 years. So they can't make a change. New fresh comers, whoever auditors have retired and new fresh comers, they have to appoint. Now there is a software given by CA Institute. CA Institute has given a software that will allow choosing of the auditors. So there won't be any manual intervention. They have been tried, and in the bank which we are doing audit, I think they have tried. I don't know whether they are successful. There are some loopholes, issues are there. But a lot of banks are taking that software for appointment of branch auditors. So there won't be any interventions, manual interventions in there. So that is also happening now. CA Institute is doing that. And central audit, you said about top 20 branches is being done by the central auditors. What happens is we take up the top 20 branches and every quarter we have to do a limited review. The problem in that is the top 20 will be fluctuating. So 18, 19, 20. So 21, 22, 23 branch number will be vying for the top. So we won't know which branch is there in the 17, which is 18, which is 19, which is 20. So we'll be doing one quarter, one branch. Another quarter will jumps into 20. That quarter, that branch we'll do it. In the year end, something completely different. So that is fluctuating. So that the one which we did, limited review, will go to a branch auditor in the year end. So it keeps fluctuating. It's not fixed. That is what I'm trying to say. Then another thing is a tax audit. You do not find a tax audit mentioned by him, because mostly the tax audit is done by the central auditor or any other auditor who can be done. It's not necessarily it should be done only by the central auditors. So the tax audit to be done by branch auditors have been taken away. Nearly all the banks have taken it out. So it will be centrally audited either by the central statutory auditor or by a separate agency. And normally the help is taken from the central auditor with the zones and other things which is we are auditing. The data flows from the branches to the zone, and the zone will be consolidated by the central auditor and furnished to the bank tax auditor. He will be filing the returns. In some cases, it is shared and the central auditor himself is filing the tax audit. So that is why branch does not have any tax audit. So you are not required to see whether any cash balances, any TDS issues, returns filed. Earlier it was there, now completely it is not there. So it goes out of your purview. And then MRL, he said MRL. Some of the banks give MRL, some of the banks branches do not give MRL. So of course you should know about it. So your auditor will be discussing with the branches to give it. Some do give it. Anyhow, what we felt is, even whether they give it or not, all the BS return, balance sheet returns, which has been given to you, completely gives all the information, claims, whether there are any claims against the bank. All those information as that itself is an MRL. In fact, that's what we used to sign it. Manager signs it and gives it to you a copy. So that itself is an MRL for you. Then the NEFRA, SA 600. So you, as a branch auditor, has to give a SA 600 letter to the central auditor. So that will be forming part. Most of the banks will be asking that, because central auditor has to get a SA 600 letter from the branch auditor. So we normally give a format. That format, we give a communication to the branch auditors. So what is the materiality, all those things, what you have to report and all that, central auditor will be giving. Then branch auditor has to give that letter to central auditor. So this is a format. And the SA 600, you would have remembered in October 24, there is a RBI, the NEFRA circular, which has enhanced SA 600 information. That is, you have to see the work papers of the other auditor, component auditor, be it a group auditor or it's a branch auditor, it's to be seen. But that has been made not applicable to banks. So now SA 600 per se, which was earlier applicable, as per your SA 600, that is applicable. So that stands for banks. Only for other listed companies, the format has been changed. Very detailed letter has to be obtained from the component auditors. Now, there is another NEFRA issue going on with all the banks, all central level, not with the branches. What is TCWG? What is the SA number? 260. Sound has come down. 260. So now NEFRA has issued a letter to all banks that SA 260 TCWG, two-way communication, has to be established. So not the auditor meeting the audit committee, meeting the EDs, meeting the GMs and all, not sufficient. Who will be TCWG? Who will constitute TCWG? Board? Only board? No answers. You say TCWG, you say 260, but you are not read into it. Please see this latest circular. I think I didn't mention about that. I don't think I mentioned here. TCWG letter now, two-way communication issued, I think in January. You can just Google it, you will get it. It's beautiful write-up. Only thing they have copied everything from SA 260. And see the technical, guidance note or technical guide is issued for SA 260 on this letter. There is a technical guide ICAI Institute has beautifully given. It's a technical guide. Beautifully they have mentioned what NEFRA wanted, what is it the banks have to do it to comply with the two-way communication. It's not only banks, it's applicable to all listed entities. It's not only on bank. This is applicable to bank also. Either one SA 600 where they amended, they said it's not applicable to bank. But here this is applicable to bank. So all the chairmen of the audit committees have been given into this. So you have to first constitute 260. What is SA 260? That is very important. TCWG. What is it, TCWG? That is you have to constitute. This is a big tussle now going on in all listed companies and all banks. who is TCWG? Is it entirely audit committee? Is it entirely all the board? Then entire board has to sit for the TCWG. You have to have a meeting, pre-audit meeting. Then before the audit is getting over, signed to be signed, you should comfortably have something before, well before, not 1 day, 2 day. Well before you should have another meeting. And series of meetings you should have, at least 2 minimum. So this is all been done. Then that means you should have another board meeting itself then. If you're going to have a board meeting with members into it. Then CFO will be there. COO will be there. And then risk compliance officer will be there. GMs will be there. So whoever signs one interpretation, whoever signs the balance sheet should be there. Eligible to sign the balance sheet. Required to be signed with the balance sheet. They should be there in the TCWG. So this tussle is now going on. Who is to be TCWG? Then who is the nodal officer? There is a nodal officer mentioned in NEFRA. It is not there in 260. There is a nodal officer. Who is going to be the nodal officer? Again tussle. We are still fighting out to find out who is the nodal officer. Bank are saying CFO. We are saying no, it can't be only CFO. It should be others. So just, these are all not your areas. You can just get to know what is happening. These are all the things which your auditors will be discussing with the banks and other things. So this is what is now live happening in banks as far as this year is concerned. And then sir said about term deposits, the matured term deposits, we have to be very careful in verifying. I've got an issue where RBI came back to us saying that we have taken the dump of term deposits and we have seen unmatured 0% given. So the bank is not making provision for the unmatured term deposits. It says 0. At least 3% or 4% will come. So see the volume of matured term deposit. If you put a 3% or something like that, in some buckets they say even 0 is there, even in other cases. Maybe unclaimed and all that. So the amount of provision which we made after that was so huge. So this is an area where we are supposed to take a dump of the deposits in the branch also to see what is the rate of interest for each and every deposit. So this the bank RBI person was able to do, which auditors we failed. We didn't do it. I don't know why. So this was an eye opener for us also. But of course they do it. Dump is everything is given at the head office to them. We just go there and verify some samples and we say it is all right and we just get off. And probably the one which we are seeing, the matured one, and probably the rate would have been there. So we don't know where they flagged it as 0 or they flagged it later. We don't know what it was, but that was shown to us. So these are the things which you have to see. And then one more thing on the financial statements which he said, I just remembered that the final statements, this is at the central office, not at branches. So we have to be very careful with the schedules connecting to the main schedule, because here the amount is in crores. So 0.01 is not 1 rupee, it is lakhs. So what we did is, in one case, one central auditor, consultation auditor has given the subschedule as 0.02. The total has come to the balance sheet as 0.01. The quality reviewer, you know what is QRB? Quality Review Board, QRB. So you do verify these things. The person who came, he literally verified what is signed accounts, what is printed accounts, and there was a difference in that. This 0.01 to what printed was, luckily we were given correctly. In the print form it is correct, given to the public. In the signed form, there was a mistake. So these things, article clerk only normally verifies that 0.01 is not a system driven issue. So the conversion has to be properly done. It was done later, but the time, because signing happens on the day of the board. So that has been signed. Now we can't go and chase other auditors to sign it different. Board members will not be there. So we can't redo it at all. So we found the mistake, then the consultation auditor has changed in the final print. So these mistakes is very high issue, because it's going to the public. The bank's results are published. So if there is a mistake in that, even to that extent of small 0.01, disciplinary action could be taken on the firm. So that is what they asked. The central auditor gave a reply. It was dropped. So that is a amount of importance you people are verifying at the branch level. It's not just going there, verifying, just coming out. Because you are our eyes, as auditor's eyes. You are bringing all the information to the auditor. So he can't go and verify comparing the figures and all, he can't do it. So you have to be very careful in executing those things, bringing it to the auditor's level, then it will be executed. And as he said, priority sector verification. That is very, very important because we find the priority sector branches can be seen that wrongly it is classified. And when he said about risk management, there we get hit. When we do a sample verification, we see that sectoral is wrongly given. Priority, it is non-priority. That emanates from the branch. Then we go into the branch manager has thought it is a government institution, when it is not a government institution. So at the entry level, amount was also, in fact, it was not small amount, it was 50 crores. We found in one case, 50 crores, a manager is entering in a wrong sector means what? What amount of training the bank has given to him? In spite of that, he is doing that. Of course, that 50 crores is not even 0.00001 for me in the total thing, but this is an error picked by the RBI. They say these many errors are coming. So what I am to believe the others? That's what they are asking. So that sort of thing, that can be little bit verified. You have a sample check as to priority sector verification, whether the sectors have been properly classified, agriculture, non-agriculture, all those things. That has to be seen at that end at the branches. At least we will be safe from the branch level side. As far as when he said we'll ask for the advances, it looks like advance audit instead of balance sheet audit. Those are the days when I started the bank audits way back 90s, early 90s and all. No, born at that time, I think. So it was all balance sheet advances audit. It's not a balance sheet audit because we never had balance sheet at that time. It was only a trial balance sort of thing, and we used to see the advances. We go there, start verifying advances, finish the advances, come back. Rest of the entries we'll never see, we'll never get to see also. It was an advance audit. That still carries, so advance is given a weightage when for the size of the branch, for the fees allotted to the auditor, all still the advances is the criteria. Gold loan, jewel loan, number of packets, that's what you are supposed to see. Last year or year before that, my article clerk, who was is auditor now, he was given a branch of that, and he would call me, sir, what to do? I asked him, what's the problem? I am having 5,000 to 6,000 gold packets, and every time I count, I am getting a different figure. What I will do? I told him, you stop all the work, put an entire team. I can't give you any answer. Put the entire team, then count it. That is the final. You give it, whatever you counted, you put that as final. But you have to stop all your work. You can't say I have done the sample. You can't do that. If you have given a branch for which is having 6,000, 7,000 gold packets, what I will do? So he counted and he gave a difference. They'll take action on that. That's it. And jewel loan is that about opening and closing rollover. This is a very big issue. That circular, September circular of RBI wanted to counter that. It is a very big issue pan India. Of course, the gold loans are much more in the south only. There is not a single gold loan in the north. They don't pledge their gold. It is God for them. So in north side and all, you don't have much gold loan. Only in the south belt. So gold loan, they have a big issue. What they will do is, they will close the account, they will open the account, and they will close the account at the same day. So the evergreening. What they do is, they first open the account, take the cash, go to the next counter, pay it off. This is what happens. So then immediately we found that it is happening on the same day. Then immediately we ask, okay, bring the scroll. What is the time of closure? What is the time of opening? 12.00, 12.01, it will happen. How come within 1 minute, it is not even seconds, you open a loan and close the loan? How is it possible? 10 seconds, 12 seconds. Last time we had a lot of NPAs, that it is a rollover, it is a sham. So they gave NPAs. It was done. But though the loan was closed on 12.00, loan was opened on 12.01. So that is correct. No, they were arguing. Auditor is saying how it is 00 to 001. How is it possible to do it? This is the branch auditor's argument, and he has made it NPA. We were having a hell of a time last year. How to treat those things? So huge amounts. It was all made NPA. So that closure timing. So the thing is, we have to see the timing. There you will get caught. They can't do anything on the timing. Sometimes they say they'll keep it and then they'll pay it later. They keep the cash in rural areas. They'll keep the cash, then they'll deposit it. That and all also will be happening. So that's where the gold loan is a tricky issue, still a problem. Tell me, what are all the recent bank frauds? What you remember, bank frauds? Yes. Someone said. Yes. What is that? No. That is okay. But what was the fraud about? The fraud was about when the government institution wanted to close their FDs. The FDs were not there at all. The officers colluding with others, colluding with the government officers, they have already closed the FDs and taken out the money. So this was a scam. This was a issue with IDFC fraud, but they bank managed to pay off all the FDs to the government institutions. They were debarred. That bank was debarred for any government operations. One more bank also, a small financer, someone was also barred based on that. But the fraud was 500 crores on IDFC. Then what was the other fraud? Not a fraud, scam or something like that. Sir was taking one area in that. Investments. Anything you remember? Little bit, maybe 7-8 months back or within a year. It's not a fraud, but it is a issue that is on IndusInd Bank. Of course, I don't know whether I can tell about the name because it is a public. I can tell, I think. On the investment disclosures, when that exactly it happened when the new investment policy came. Whatever sir said about your Ind AS issues, which is there, the aftermarket, all those things. That when it came, immediately this issue came up. Of course, that is all over now. The disclosures are changed and all that, but that was another one. And this jewel loan frauds, every day it's happening. Jewel loan frauds. PNB is a old one. Swift issue is a very old one. And coming to the DP case, so these are all just my thought process. I'm just putting. I'm sorry, I'm not yet started. DP cases. In DP, what will happen if stock is there and you have creditors more than that? It's a negative, and you have debtors positive. You will net it off, or you will ignore negative and take positive. Just thought process. You will have such situations. When you go to the audit, you will get the DP issue like that. We do have. We have taken, everyone says, sir, we'll remove the negative. We'll take only the positive. Some, whereas they are, the DP is comfortable, they'll net it off. They will do it beautifully, they'll do it. It should be netted off. So just thought process when we said DP. And this audit opinion, the disclaimers, yes, it is given. Central auditors, as far as we are concerned, the format is given. All the items which are not verifiable at branches, it will be disclosed as not verified. For example, in other matters like memorandum MOC is given, provision for NPAs, because I'm going to come to that. A lot of things you will not be doing at branches at all. Though you are now learning about it at NPAs, you will not be doing at branches at all. It is all systemized and taken care of at head office. Provision for non-performing, provision for restructured, provision for standard advances, provision for contingencies, other assets, provision for unhedged forex fluctuate exposures, country risk, and like that. Then leave encashment, AS 15, salary, wages, everything. These are all what I'm reading are the disclaimers. These are all taken at head office. So we do give that. Only thing, don't change it, because we found in one case one branch auditor has omitted to 2-3 items, or he has added to 3 more. I don't know why he has done. Then we went to it and see that it is there in the branch. He himself has added. So that also you have to see as an auditor when you go, see whether your other matters is proper, which has been communicated to you and it is correct. If something is added or deleted, please look into it and then format your auditor's report. So that also has to be seen. Just like that, we should not sign it. So be very careful in other matters. I think that's it. So I think I can move on. So guidance note. Sir has already Srikaanth told you on guidance note. Beautiful book. I don't know whether you'll have time to read, but so it's a soft copy. I tried to get one hard copy last time. It came 14-15 days later. By the time my audit was over. So this time I didn't even try. It's a good book because once searching facility, yes, soft copy is useful. But if you want to see something which you remembered and you don't know how to search, then it's difficult. That time I can see by the title. Very easily I can go by the paper. Sometimes we old generations, we love books. So like that. So download all those things. There is a section B and the main text, and then section B is there. Complete circulars they are given, but at least main text plus the section annexure B, I think, that please download it. So that it's always handy. It will tell you how to do the audit also. It's a beautiful book. Every year, very painstakingly, ICAI is doing it and releasing it. Please read that. Wherever possible, you read. Don't try to read everything. You can't finish. So wherever you're doing, whichever audit you're doing, just by evening, you just go half a day, half an hour, 1 hour, just try to see what is that given in the guidance note. It's a beautiful one. Then nobody knows anything on this, I think, technical guide on revised formats of LFAR 2021 edition. Again, a beautiful literature. Once LFAR was revised in 2020, in 21 they came up with a technical guide, giving each and every questionnaire in the LFAR. They have given a lot of things. They have referred to the guidance note, referred to everywhere. That is a beautiful thing they have done. It's a wonderful technical guide. And then this one, again, the utility. If your audit firm has got their own software, data audit software, you use that. But if you don't have any separate software, because we have auditors desk, idea, this, that and all, we have a lot of softwares coming in. So we are using that software. But sometimes it doesn't very easily apply, and with the time involved, 8th we have to sign the branches. We will not have even time to open that sheet. Impossible. Getting the approval, then the review partner has to approve, then it will never happen. So, and you can't do it after 60 days and all. It's not possible for branches. By the time you'll forget what you have done. So that audit software is good, but timing concept, it may not work out immediately. At least this utility is really wonderful. I can just show you. This is it. Each and every item of the LFAR or balance sheets items, they have given it. When to start, when to how much is completed, how much is not completed, everything with the review partner, everything can be seen. And if you go to each and every item, see for advances, this is the number of checklist given. It runs to pages, lines. Mostly it will be not applicable because it have agriculture itself will have lines, and something big advances will have so many line items. So you can just put not applicable. So wherever you want, you can refer this at least. If whether you want to fill it up fully or not, at least refer and fill up so that you don't get to miss anything. So that each and every items they have given in this utility, and it has got attendance, before that, and it has got some items of central office also, corporate office also, that has got. But this is very useful utility. Please refer to this utility. Abbreviations. Bank, you have to know abbreviations. So they'll be just telling all sorts of abbreviations. So what is important in this is DP, DPN, ECGC, FITL, Funded Interest Term Loan, SIRC, acrylic. This is the word they will use every time. You know what is SIRC, what is acrylic, what are the functions, what is the reporting formats for that. Please see that. JLF, Joint Lenders Forum, that will happen in consortium advances, with bigger advances, whereas consortium there will be a joint lender forum meeting. Kisan, KCC, KYC, key fact statement. Anyone tell me what it is? Anyone have seen that? Was already done bank audit? No one? This is a very, very important document as far as RBI is concerned, as far as branches to branches. So like they take KYC, the bank is now giving details of the particular loan or whatever facility the borrower has taken, giving all the details about that facility. Suppose he has taken a demand loan, a vehicle loan. What is this vehicle loan? What is the rate of interest? What are the repayment schedules? Not just the sanction letter, but it gives a lot of other information. This is mandatory to be given to the borrower. Once a sanction letter is given, this has to be given, then only the loan can be disbursed. This is a very, very key item. Now RBI is finding fault with various banks that they are not issuing this. They are asking, now they are putting it to the central auditors whether you are ensuring that this has been done. They are asking. So this is a very, very important document, KFS. LFAR, LTV, loan to value, that is coming in jewel loan. NPA, PAX, Primary Agriculture Credit Society, coming in normally in rural banks and all, you will have these loans. Provision coverage ratio, RBI risk-based internal audit, that is your internal audit. Concurrent audit is coming in that. IBA, Indian Banks Association, IBC, SHG, self-help group, the loans will be there to them. So you have to verify what is the documentation, what is the security, whether it is an NPA or not an NPA. You will be seeing the working capital term loan, then SARFASI, then one concept of MPBF. I will tell you later, there's a slide for that, maximum permissible banking finance. So that also you have to know about it. Sometimes they will talk about. Normally this is given a go by, But suddenly when you ask some information, they'll pounce onto this. They have a very good thing to rely upon. So banks will do, branches will do. So just a small questions. What is this? Which is correct? Sir said about CAF in the morning, having various CIF. So you have to see that one borrower has got only one person, one customer has got only one CIF. You will be having your CIF in your bank accounts. How many people say A? How many people say B? C? D? Okay, good. B. What is DCCO? I have not yet covered. What is DCCO? How many A? How many B? How many C? No one. Then D. Correct. This will be discussing what is DCCO. This is the date of commencement of commercial operation. Where there's a project, their date will be fixed. So till then it will not be it will not commence its operations. So it is there. Then once you change the date, it becomes restructuring. That is where the importance starts. So how many times you can change the DCCO is given in restructuring cases. You will have this case coming up. RFA means A, B, C, D. Good. B. What is this? A, B, C, D. Which one? A, B, C, and D will not. C. Someone says C. Okay. Early warning signal. But they also use the word early warning system. But the circular RBI uses the word early warning signal only. MOC means this will hear it once the NPA starts. A, B, C, D. It's memorandum of changes, not charges. Incidental to that is memorandum of charges. It's not memorandum of charges. What happens is whenever a loan is charged as NPA, then immediately they will incur starting expenditure for that, because when you file a suit on that, you will have a lot of expenditure spent for that. So we auditors said that you can only write non-charge the interest, but that is income. What about expenditure? You can't debit it to the party. This expenditure is, we don't know whether we'll get it. Income is something different, but this expenditure, how are you going to get it? It's our expenditure. How do you charge it to the party? So what happened is we charged it off to the P&L account, but there is one way of debiting the party and keeping it in suspense account. So that is done. We call it as, in our bank, we call it as MOX account. It is a different way of accounting because there is no entry. It is debited to P&L, but still there will be a debit to the party account. So that will go along with the total outstanding due from him when it go to the court. So that is one MOX. That is a memorandum of charges. That interest is MOC is only memorandum of changes. Okay. That MOC is something which you make changes. It is nothing but a journal voucher, something like that. Okay. This is the withdrawal of various circulars. So RBI has consolidated around 9,445 circulars. They have made it into 244 master directions. So this is the main circular we are now talking about for withdrawal of circulars. So this is everything. If you see 28 November 25, you will get pages in RBI website. So they have withdrawn all the circulars, and this circular talks about withdrawal of it and issuance of various other circulars. So this is it. Incidentally, I can show you how many circulars they have issued. See, this is where the circular on the income recognition, next on the willful defaulters, then stressed assets directions, then financial statements disclosure, which is all there. Sir took in the morning. So that is it. These are the highlighted one or the more important reference to it. These circulars go for commercial banks, NBFCs, cooperative banks, everything. So you see the number of circulars they are given. Financial institutions, everything. credit information companies, everything. So this much of 244 directions, we call it as directions they have issued. So this is what now here afterwards you have to refer as far as the IRAC norms and other cases are concerned. Now we are going to the IRAC norms. So for IRAC norm, just as I showed you, this is the circular, this is the direction which we have to refer, where it comes. Just you can take a copy of the circulars, I think 15-20 pages, beautifully given, very simple. They'll tell you whatever I'm now giving is only copy from that. Of course, this is what was there earlier in various things, and in guidance note also they have given it in that way, but guidance note is more elaborate, so it will go depth into it. But now we have just taken out what is the main issue, what is the circular is about, what we are supposed to see as an auditor when we go into it. So you should know about SMA. What is SMA? Someone can say special mention accounts. So that means whenever an advance which is probably or likely to become an NPA future. So the moment the irregularity starts, we name it as SMA 012. Within 30 days, within 60 days, within 90 days, the outstanding irregularity starts. It becomes, what is the outstanding irregular? Already sir has said, but again I'll cover it. And CCOD starts in some banks as SMA 1 and 2. No 0 is there. 30 probably they've given us a grace period. Maybe in some banks they do have 0, 1, 2. Here otherwise it is 1 and 2. Starts with SMA 1. So this SMA 0, 1, 2 is very important because this is reported to RBI. And every day you can take a list of what is SMA 1 and 2. 0, 1 and 2. So once you go for audit, you have to ask a list of SMA 2s first. So whether they have done anything to see that the SMA 2 is from NPA, it has been moved to SMA 2, not to convert into NPA. So this is the first step we have to see. SMA 2, if you tackle, the audit is halfway over. Then how would NPA is classified from SMA 2? So 31st March, he is overdue. It's a day end process. So the entire day he is supposed to pay this day today, 31st. He does not paid. In the day end, once the system runs, it will mark as overdue, 31st March. Then 30 days, then 60 days. The 90th day is not on 30th June. It is on 29th June. Date wise. Earlier it was month wise. Long back it was all month end and all was concept was there. That has been given a go by. Now RBI has said that you have to do it on date wise. Day end, you have to mark any irregularity, any NPA, day end, you have to do it. So on 29th June, it will become an NPA. So that is first thing you have to understand. It's a day end process. And hypothecation statement. Again, I'm coming to that because what sir has said is this is the way the statement will be given. They have their own formats. Bank gives the format to the borrowers. They have to give this format. What are the total stock? Then book debts within the particular period, age-wise, less creditors, then margin, allow the drawing power. So this will be fed into the system. And these figures are already given. It will come to the statement, will come to them. Then just the bank has to feed in the figure. And sometimes advances also is considered. So you have to go to the sanction to see whether advances are covered, whether you can add advances, whether you can add amounts, whether sister consent dues in book debts, whether it is allowed or not. Those things has to be seen from the sanction only. So just don't take the book statement, stock statement and then enter it. You have to see whether that stock statement though given, whether it is eligible for them to consider it. We have problems only on advances. We have very big problems on book debts with sister concern. Sister concern normally is not that it is banned. It is allowed, but sanction should be very clear. I have a case, live case, where sister concern was not considered, but it has turned into NPA because it was wrongly considered. Now if I remove it, it becomes NPA. That sort of an issue, it can happen even in big branches. So we have to be very careful on the, so please go into the, like what he has said, that you have to go into the sanction. Read that sanction then only. So you have to select how many parties you can see. You can't see entire 100, 200 parties, 50 parties, 60 parties of CCs you can't see in a day. So you have to say whatever large borrowers you are seeing, that you have to see. We'll come to LFR where we'll talk about large borrowers. So there we have to go in depth to see the sanction, see whether the stock statements are proper as per the sanctioned letter. This is what I said about MPBF. So normally the banks prefer compute the working capital finance for each and every borrower. So in that, the level of debtors, creditors, everything is given. So whatever level of creditors is pegged in that letter, in that working, the banks, when stock statement comes, the level of creditors up to that level is not reduced. It is assumed. Once the, suppose 100 crores is the creditors allowed as per the MPBF. So if the creditors are lower than that, so creditors will not be reduced in the stock statement. It will not be done. It will be zero. So you should not fight with the branch manager saying that you have put zero. You have not even put any creditors. Up to 100 crores they will not reduce. 110 crores means 10 crores they will take. Over and above that they will take. So that is what MPBF, they will immediately rely on this. For that, the sanction letter should clearly work out MPBF. What are the limits, amounts, everything has to be mentioned. Then only it is allowed. Not just like that, they can't rely on MPBF. Sanction letter should be clear on that. So this you should remember when you do the audit. It happens in many cases, big cases, it will be there. Anything which is more than, there's no limit on that, but they do it in a bigger cases. Then reviews. This is very important. When you see the review of any advance, any CC, don't go for a renewal on the term loans and all that, because that is not very mandatory, though it is done. So you have to see what is the renewal when it is getting due. Every CC has to be renewed in a year. If it is not renewed within a year, then they are given 180 days time. That is 6 months is given. 2 times you can do a short review. After that, it automatically becomes NPA. So this is a very, very, very important thing, because in LFIR you will have a report on whether everything has been renewed within the time frame, or anything over 3 months itself has to be reported. 3 months and 6 months, what is the renewal pending has to be reported. So what is the NPA? It ceases to generate income. So that is the definition. Then how it is a overdue? If it is not paid on the due date, that is simple. So 31st day you have to pay interest and not paid at the day end operation, it becomes overdue. Then what is out of order? There are a lot of terminologies getting used. Overdue, out of order, irregular. So these are the things. So the norms there, overdue is also used. Out of order is used in CC account. See, outstanding is more than sanction limit or the DP for more than 90 days. Or there are no continuous credits for more than 90 days, it can become NPA. Or the credits are not enough to 3 months interest, then also it will become NPA. So you have to go through the account on all these factors to determine it as an NPA. Just like that, we can't do it, but these factors has to be clearly gone through it to make it as an NPA. Then bills payable, book, BD and all discounted. Again 90 days. Crops, already 2 crops seasons, 1 crop season has been covered. Then LC and BG. This is a very important, it comes under non-fund. So we have to see once it is LC is devolved or BG is invoked, then it becomes a funded amount. It is not a non-funded. It becomes a funded because bank is making payment to the particular third party. So then becomes funded. 90 days starts from that. It has to be paid within the due date. Otherwise, it becomes NPA. The problem starts with, in LFIR, you have a separate question on that, is interchangeability from funded to non-funded. So once the funded limit goes off, you can't add that to funded limit. Non-funded goes off, you can't add it to funded. So you can't rely on that. So you add 100 plus 20, 120. No, you can't add. So it goes to 100. Within, if it crosses that limit, immediately it goes as NPA. Irregularity starts from the date. If it is within the limit, no issues. So this is a very, very important one. This is an amendment. This new, moving from funded, non-funded was added in the LFIR 2020 only. So that they found out that this has been happening. So they added that in LFIR. In case of term loan, over 90 days. Very simple. Then your stock statements should not be more than 3 months old. If it is a monthly stock statements, if there anything is more than 3 months, then it becomes irregular. So even NPA can happen. Irregular drawings more than 90 days, it becomes irregular. So these are all the accounts. When you want to see the accounts, these are the things you have to capture. In the checklist, you have to ask whether irregularity is there. Stock statements are irregular, regular. If the irregularity, how many months irregular? All those questions will come in the checklist. You have to have this as a checklist. Ad hoc limits not regularized within 3 months. If you are given ad hoc limit 3 months, it has to get regularized. Otherwise, again, that will become irregular. 180 days I've already discussed. Without sufficient documentation. So sometimes review can happen without any documentation or not sufficient documentation. They will do the renewal. That is prohibited by RBI. So they'll come down heavily if you do that without any documentation, because you have to get the renewal documentation, financials, all those things has to be received. Then only you can do a review of account every year. So if it is done without the documentation, it becomes NPA. Moratorium period, it's okay. It's interest is taken only after the moratorium period, then only it will become NPA. So that is okay, understandable. Now in central government guaranteed accounts, there the NPA is given an exemption. So even if it has become overdue in central government accounts, guaranteed accounts, it will not become an NPA. Only if they repudiate the guarantee, central government, then it becomes NPA after that. But that exemption is not applicable for reversal of income. So if a central government account comes NPA, guaranteed accounts becomes NPA, income has to be reversed. You can't recognize income, but it will not become an NPA. But that is not applicable to state government guaranteed accounts. That normal IRAC norms will follow for state government guaranteed accounts. And this is also now given that temporary deficiencies will not be treated as NPA. So what is temporary? High discussion, high issues will come with the branch manager as well as auditors. Non-availability of DP on the latest stock statement, just temporary excess of over outstanding, non-submission of stock statements, non-renewal of limits within due dates. So you have to see the operation of the accounts and decide whether he needs to be classified as an NPA. Account operation is not all right, and all the other factors you have to weigh in to decide whether he becomes an NPA. Otherwise, these temporary things need not automatically make him NPA. This is what circular also says. Post shipment packing credit, they have got a time limit of 360 days. Post shipment suppliers credit, the EXIM guaranteed amount can be reduced before making an NPA, treating it as an NPA. Project finance, now I think Iran conflict, so you'll have a lot of issues. Project finance, where the amounts are not brought into India, then they will be given time for that. So that 1 year is already been given. Now probably they may relax and give more, we don't know. Near about regularized, this is a very big issue. Accounts regularized near about the balance sheet date. So that is in the balance sheet date, you have seen that he is not been classified as NPA for various reasons. What are those reasons? Whether the reasons are appropriate or you don't accept the reasons, then you have to get into it and make him NPA. So this is a very big issue. You have to test it, record it, that though there is a problem, he has not been an NPA, but there are certain problems that he should be marked NPA, or you have to accept that he can be treated as standard. After the balance sheet date, yes, this is a very, very big issue. Whether regularization after the balance sheet date, RBI says no. Bank says after the balance sheet date, you have a institute guidance on that, standard is there on that. Why don't we do it? This is a very big issue. Probably the amounts, if it is very huge, and the party conduct of accounts has to be seen to treat this. Otherwise, it is auditor's perspective. Auditor has to decide whether to do it or not to do it. It's a big issue. I can tell you one example where, of course, there is one more issue in that. When an EMI was changed, when I was doing the audit in 21, EMI was changed in 18. I don't know why it was not taken as restructured at that time. God knows. So now the EMI has been changed. Wrongly, the EMI amount was fixed. For example, if it is 25,000, it was entered into that system as 20,000. And for the 3 years, it is going on. And now in 21, when I see there are only 6 months to complete, I found it is as per the 20,000, 25,000 EMI. He has already lapsed. The amount is over. He is already overdue for so many months. But as per the system record, based on the 20,000, the lower amount which they have fixed, he is still regular. I want to treat him as NPA. So the first issue is whether it is an issue of the banker's mistake, whether the account can be classified as NPA. The customer says, I have paid as per the bank instruction. Of course, he can't rely on that because he will be given that key fact sheet, something like that. In those years, they used to intimate him what is the EMI. He should say that is wrongly entered. He has not come back, that is one way. But anyhow, he says, I have paid everything regularly as per the bank norms. So that is an issue which we have to decide whether we have to take it as NPA or not. Number 2, he completely repaid within 1 month. Before our audit was over, he is completely repaid because he doesn't want to get into issues. Now, after the audit, after the year end, he has repaid, whether he is NPA or not, leave alone the change in the EMI. So that is an issue. So these will be the live issues which we will be having, whether to treat him as NPA, not an NPA. There is no clear instruction from RBI as to whether the balance sheet date, after the balance sheet date. Normally, RBI says, no, you can't consider. That is what normally they'll say. But depends on value. Here my cases were around 20-30 crores. Not 1 lakh, 2 lakhs on that case. Huge. He paid, that party paid. No, sir, not 20 crores, it was 1.5 crores the party paid. He's an individual. He paid the money. So 1.5 crores, whether I have to treat it as NPA or not. So that was an issue at that time. So that after the balance sheet date regularization, you have to be very careful. You should normally not accept it unless you have a very strong case and documentation with you that is, it need not be treated as NPA. And NPA, whenever it starts, you have to reverse the income. So you can't account the income. The income is taken on cash basis, receipt basis. So that is what their income is reversed to MOI account, memorandum account. They will have all balance sheets, all banks will have MOI account, memorandum of interest. So there it will be parked. Then recovery is another thing. Once you recover, then you can take the income. So what you have to see the bank's policy. Various banks have their own policy of the appropriation. Once you receive an amount, whether it has to be taken to principal or interest. So the policy will decide. There's no clear cut. The RBI has not categorically mentioned it is to be taken this way only. Either you can take it to principal or you can take it to interest. Again, standard uniformly followed policy of the bank will decide. And their accounting policy will clearly say, loan policy will say where it has to be appropriated. You have to see for the loan policy of the bank. Then only you will understand in the branch where they have appropriated. Normally it is done in the head office only and it will be pushed to the branches. So there, if it is principal, then interest recovery will not be there unless the principal is recovered. If it is interest, then you have to now recognize the income. From the interest, automatically the system will take it to the P&L account. Now coming to the classifications. So you all know, I think, standard, substandard, then doubtful. In doubtful, you have D1, D2, D3. So standard assets, fine. Substandard, when it has remained NPA, whenever it has started NPA after the 90th day, next to date, it will become that day end, it will become NPA. Then if it stays there for 12 months, then it becomes up to that, it is substandard. 15% provisioning on the entire outstanding, and unsecured portion, that is secured, unsecured. The outstanding will be classified as secured and unsecured. So what is secured is total tangible value, what all the assets. If it is covered, it is fully secured. If it is not fully covered, then an unsecured portion also will come. So if there is an unsecured portion, extra 10%, that is 15 plus 10, 25% on that figure. So this is how on substandard. Some banks provide 25% overall. They don't segregate. They don't want to segregate. So they do 25% on the total outstanding. But some will do on the 15% total and extra 10 on the unsecured portion. Then after 12 months in SS, it will become doubtful. Next day it will become D1, D2, next second year, third year it is D3, with the provisioning for secured portion 25%, 40% and 100%. Unsecured, right from day one it is 100%. Loss, wherever the bank says it is a loss, normally for example fraud cases, advances which are fraud, it will be classified as loss asset. Any recovery already taken, they will reduce it and take it as fraud. So that will be the loss assets will be classified, that no recovery is possible, 100% provisioning will be done. And as morning we saw that it is borrower wise, not facility wise. This has now come to a very great extent, it has been reduced. But 5 years down the line, earlier we had a problem that one account will be NPA, one account will be standard, another SIF will be there, two SIFs will be there. But now that has been 99.99, it is curtailed. You cannot have two SIFs for a same person. So that is curtailed. So that way, it has once the SIF is touched as NPA, entire SIF automatically system will do it. So there is no question of any manual intervention. Devolvement of LCs, I have already told you. Exception is whenever a BD bills discounted on LC, if the LC is not accepted on presentation on not on date, only then it will become NPA. Otherwise, though the facility is turning into NPA, this item will not turn into NPA unless this happens. So this is only one exception to that entire facility going into NPA, a small item. Then we have to talk about floating provisions. These are all done at head office only. Branches will not have anything on that. Floating provisions, approval of a board and permission of RBI is required for extraordinary circumstances, from calamities and other things. Floating provision can be made. Additional provision is normally done by many banks. So they do a lot of additional provisioning on the standard assets as well as NPA. A board approved policy is to be there. So what are the sectors? Some sectors they will say we'll have a lot higher provisioning on the standard assets. On NPAs, they will have higher provision. So that has to be disclosed in the balance sheet. and every limited review we have to present to the audit committee what is the total provision. Again, this is at a central office. Technical write-off again at the central office. Wherever the account they don't want to maintain, the recovery is very bleak, then they will completely write off. Though it is written off, the claim is not foregone. So they have still the claim will be there. They can go to the court. Still it will be in the court. But in the accounts it will be closed, completely closed. Valuation. NPAs which have a balance of 5 crores or above have to have the stock audit done and collaterals done in once in 3 years. But stock audit very rare. After an NPA there won't be any stocks. The unit should have been shut. Some very rare cases we have NPA running NPAs. There the stock audit has to be done to have the values done, because the security is very important for NPA classification. Valuation of immovables has to be done once in 3 years. Otherwise the RBI says you make it 0. Very strictly we will make it 0. But of course we give a graded reduction, 25% reduction, 50% reduction, because they are all immovable properties. It will never go down normally. So anyhow we give a reduction 10%, 15%. RBI themselves recommend, though they are very strict on that, but they recommend okay, give 10-15% reduction on the value if valuation is not done. Then wherever the classification goes from standard, SS, D1, D2, D3, it is on the same line it will go. On the same way it will go downgrade, but you can't jump. But there is an exception where the realizable value of the security is less than 50%, then automatically you can go to doubtful. If it is less than 10%, that today the value of the security is this much. It is compared to what is stated in the accounts. So it is less than 10%. What you have now arrived is, if it is less than 10%, then it goes to loss asset. So this is one provision where you can jump D1, D2 and all that. When we have a lot of cases where the NPA was missed and all that. When we get into now, I will automatically take the age and we even jump to D1. You need not go to the same procedure, because it was, had it been done an NPA in that year on that particular date. For example, restructuring, we will come into that. Restructuring, if you are given, you don't classify him as NPA. But once the restructuring fails, we go back to the date on which he is supposed to have been restructured. So that is a back date. Then it will automatically go to D1. It will not even come to SS like that. Fraud provisioning, it is done at HO level. Normally 100% is provided. The RBI gives you some quarterly provisioning. You can do at quarterly provision. But only thing, you have to make a entry from free reserves to suspense account for that balance figure, just to see that your reserves are not inflated. As this was already handled, I think upgrading. Entire facility should be moved from irregular to regular. Not a single account should come to SMA 0 or 1 or 2. No, you can't upgrade. You can never upgrade. Entire facility, entire overdues, only when it is paid, it will become a regular account, standard account. You can't upgrade it from substandard or whatever it is to NPA to standard account. So this is very strict on that. This I have covered. Automatic downgrade classification. Restructuring of DCO I already told you. Whenever an NPA is given, this mistake happens in sometimes. I don't know how many banks, in other banks they have corrected, but we find this happening in some cases. Suppose the outstanding, the NPA has got various facilities and he is a NPA now. He has got 5 or 6 term loan, 1, 2, 3, CC account, working capital term loan, this, that, everything. He'll be having 7, 8 accounts. And he has got security, immovable property, valuation, tangible securities and other securities. So that total value, we say it's 100 crores. His outstanding is around 150 crores. The tangible amount value is, outstanding is 150 crores and he has got 200 crores. So the 200 crores, how to apportion to each and every facility? Normally what they did earlier mistake is put 200 in all the accounts. System used to do it. That was a mistake. Then the system was tuned to not to do that. But once you have to enter the figure, it's manual. So whatever they enter, it has to automatically pick up to all the facilities. Which one to first, which one second, they'll put the entire amount. Suppose the outstanding first is 50 crores, they'll put the 50 crores there. They should not put 60 crores, then the 10 crores goes waste. It is to the detrimental to the bank. So that concept has to be seen. Once you get the NPS security valuation, filling into the facilities, please see that. Whether the system is tuned correctly, because we don't do the system audit. We don't know what the master is looking into it. So please see to that at least 2-3 things. Two things. Once you are getting an NPA, you have to see if it is a fresh NPA in this year, see the date of NPA. That is very, very important. Once you fix the date, next year the auditor is not going to check the dates. He is going to go by what previous auditor has given, because he can't go into that year to see how he became NPA on what date. So date, once you fix in this year, the date is fixed always till he goes to loss asset or recovery is done. So that provisioning will automatically get affected for 4 years, SS D1, D2, D3. So please be very careful of the date. Once you fix it, I can rely, the next auditor can say, I relied on that auditor. I need not go and verify it. I can very well be safe. So you please see the date. Security. Once you fix it, it is a yardstick for the next auditor. Of course, he can verify it. He is supposed to verify it. But please see it. Once you fix it correctly, it will go on. Otherwise, the other auditor will say, you are wrongly fixed. Then the change will happen. If it is huge, then it's a problem. RBI will fix up. 15% deviation is already fixed, always been asked from the auditor. Of course, you may not come into that, but it adds to that. So these two things you have to see once a fresh NPA is there. Old NPAs at least see the securities. High value items, see the security and what is the value fixed into it. For example, they will be putting plant and machinery. Plant and machinery, same value will be there for so many years. What about depreciation? We found live case. I am having a live case before me now on a 4,000 or 5,000 crores advance branch. They are putting a value, same value. Now we have asked them to introduce a system to bring it down. So this is happening. Value is not seen. Then someone takes stocks. Where is the stock? Where is the stock audit? His NPA, his unit is closed. How the stock is going to remain? Make it zero. Vehicle. There won't be any vehicle at all. Put it straight away zero. We automatically take it to zero. So these things you can see very clearly. You can see. Just ask the statement. See what is the security. Take up high values and see what is the value they are given. Very clearly. Even not current year. Earlier year also you can see. Even if there is a mistake on that, you can put an MOC. This is very important. This is the circular 30 September 24. Then based on that RBI gold loan RBI has asked banks to give their submission. They are given a clear submission as to how to be done on gold loans. So this is already done. So now it has come down. There's not much issue there, but only this date timing is involved because they're all agricultural loans. Those agriculturalists will not listen. So this is a big issue going in rural areas. In standard advances, we have a peculiar issue. When it's a consortium, margins on working capital is fixed in a different ratio. One bank will have 10%, one bank will have 15%. Then how to calculate the total stock margin when I get into it? Because when in consortium, the total amount is worked out and a share of the each and branch bank is given from the leader. So once it comes, I am having 15%, how will he recalculate it? This is a very big issue. We have told them then pro rata working and all has to be added. Then some people said we will make it uniform. The margin was treated as uniform. That has been done also to sort out this big issue because every time a recalculation has to be done on the stock statement. So that issue can come in a consortium and multiple banking. It comes very clearly in MBA. Multiple banking facilities we have this issue. Consortium it will not be a problem because it is the same margin. But sometimes it happens. And once you determine NPA, you can't take into account the security to determine an NPA. Security is, it may be 100% secure, but it is an NPA. So don't feel that it is fully secured. He is having a tangible assets of more than crores, 5 crores, 10 crores. His outstanding is only 50 lakhs, 60 lakhs. He becomes NPA. His security has nothing to do with net worth, borrower, guarantee, nothing to do. It's only security, that's all. There's nothing to come into way to treat this whether it is an NPA or not an NPA. Recovery I have already told you. Then intra-office accounts. This is a very, very big issue for the past 2 years. Now it is curbed. You can't open any account in the branches. This has been curbed. So what they do is, they open an account and they transfer some amount into that NPA account, then reverse it. So that date it becomes regular. So from that onwards 90 days starts. This was seen by RBI and now all concurrent auditors give a certificate in every monthly report. Internal auditor, that is concurrent auditors of every bank give a monthly certificate that no internal office account is used, no entries are there in internal office account. If it is there, what are the entries there? They have to certify. Every month they are doing it. So as a central auditors, we have asked the concurrent auditor to give it because it is all coming in the branches. So this is one way of avoiding NPA, just an entry. Making an entry to suppose he is overdue by 1 lakh. You make an entry of 1.5 lakhs. Then reverse it next day or 10 days later. Then his account becomes regular below the limit. On that day, from that date onwards 90 days. This is the modus operandi. So this is curbed by use of internal office accounts. RBI has issued a circular to all banks to see internal office accounts cannot be opened, and wherever it is account opened, this entries has to be verified. Now coming to automation. So now the question of determining NPA based on number of days, the provisionings, everything is automated. So what is what we are going to do? That is what we will say it later on. Documentation, sir has already said something about it, how to determine NPA. So now the determination of NPA is not in your hands. System. Everything is system. 90 days norms, reversal of income. So it says the asset classification as standard, substandard, D1, loss, everything, not loss, everything comes under automation. Provisioning. So whatever it is, 10%, 50%, 25%, 40%, you will never get to see that. It is down at head office. Your item is only classification, whether it is a NPA or not. Or any wrong classification, you can give an MOC to see that. But provisioning, you will never get to see at branch level. Even at a central office level, one auditor will be seeing recoveries. He will see whether the provision is correct. So again, it is all system driven. And then income reversal. Once you recover the money also, reversal from the income, non-paid income. What you have to reverse is unpaid income, not the entire income. So whatever interest amount is not paid, that is what is reversed to that MOI account. So once you get recovery, it is again reposted to revenue based on the bank policy. That is absolutely everything is automated. No question of any manual intervention at all in this. So we have to see only apart from that only we will be getting it to see in the bank branches. These things are all automated. Now it's gone from that. So determination is NPA 30, 60, 90 days and all. You can see SMA 2 to see whether he becomes NPA or not. Other factors which we discussed also in the morning, that issues which I have also highlighted, that only you have to see once to see whether it is a NPA or not. So this is the circular. There is a circular on automation. It should be straight through process, day end process. And then if you want to override, there is a possibility of override. Yes, they have given that factor also, override possibility, but that is coming under authorization, 2-level authorization with audit trails, everything has to be captured. So first thing you have to ask whether there is any override in your branch. You should ask. In that case, what are the checks they have given, what are the documents done? So 99% it will not be there. If at all it is there, they will give the details. But it is all emanating from the corporate office. Nothing to be done at the branch level. So wherever it is override has happened, you have to check whether there is any override during that audit period. And if you have any separate system out of CBS, again, this will not come in branches because we have NPA identification software which is outside the CBS. It will read into CBS. So that is what they are saying. It should be done straight through approach. It should read into CBS. Anything which is outside CBS, we have to read into CBS. You have to understand one thing is what is MOC? Why do you give an MOC? What is MOC and why do you give an MOC? This is the basic thing which you need to understand the bank methodology. I mean how it is taking place. Correct. No, I am not talking about that. But why you need that MOC? See, you are classifying the MOC. What is MOCs? What are all MOCs? You are given MOCs, right? A lot of you people have attended branch audits, right? Definitely MOC is there. You have to sign at least nil. Correct? What are all the type of MOCs we have? You have to tell. What are the type of MOCs? You have done, no? Bank audit you have done, no? And you have given to your auditor MOCs. Nil. Put the seal there. Ask your auditor to sign. Nil. How many MOCs are there? What are types of MOCs? What is MOCs first? Then only I can go into why MOC. Memorandum of changes. What is that? It is nothing but a journal voucher. So you go into the bank. I forgot to tell that. I will come back to this later. See, once you go to the bank, you should know the terminology. So once what happened? We went long back, okay. We went along with, I was an article clerk and I went with my senior. We entered into the branch. Asked, sir, okay, sir, give me trial balance. That manager said, no, sir, there's no such thing here. We don't know what to do. We have to complete the audit another 2-3 days. He says, there is no trial balance. Sir, it is a balances of debit, credit. Sir, there's no such balances. Trial balance we don't have. Half a day we fought with him. Then finally, sir, you please ask your zone office, this office, that office. Then I asked my friend, my senior contractor friend, sir, you ask him this, what is the debit, what year end, month, day end, what will be the balances for each and every account. Ask him what it is. He said, what he said, day end balances. If you say trial balance to him, he will not understand. Day end balances, that he will understand. Yes sir, I have that sir, I'll give you. So the nomenclatures completely different. Day end balances, statement of ledger account, daily balance book, something. If you go and ask him journal voucher, he will never know. You just ask the branch manager people journal voucher, they will ask what it is. They will know voucher. Voucher means anything which they enter is a voucher for them. There is no question of any journal voucher at all for them. Everything is entered in the CBS. A debit or credit or an entry is made, it's a voucher for them, and the voucher will be pinned. You will have a big bound book. The vouchers will be there. So that is vouchers for them. They call it as vouchers. I don't know, some people, big books they will come and give. I don't know what name they call. It's vouchers. But you ask for journal voucher, they'll say, we don't know. So what is MOC then? Why do you give MOC? You don't know. So you have to understand why MOC arises. You are in CBS system. What is CBS system? What it is? What it is? It is all connected. Online. Online. Today it is live. Is it not live? So 31st March, I finish the transaction. Do I enter a journal voucher on that day? 31st March. It will not happen, right? You are going on for 2nd April, 3rd April, 4th April, 8th April, you are signing. So you will give a change. Anything you want to change, you will give on 8th April. In companies and all, you can go back to 31st March and enter it, correct? You can't do that in CBS. CBS is live. You can't go back. 12/0, 12/00, 12/01, 31st March, it becomes 1st April. So anything entered after that is 1st April. That is CBS. CBS is live, online, live. You can't make any entry, backdated entry. No way you can pass any voucher. You can't do any entry after that. So whatever you do from that 12 o'clock in the morning, 12/01 to date, these are all entries which will hit only CBS in the next year. So for entering into 31st March, we pass a journal voucher that is called MOC, Memorandum of Change. It's a memorandum of changes to CBS. It will not hit the CBS on 31st March. It will never happen. Not at all possible. Impossible. Otherwise, the balances will change. Suppose I enter into advance for 1 crore. He would have withdrawn it. Where is the question of 1 crore entry in that? The account itself would have got closed. I have a live account. A live account, when I wanted to create an NPA on 31st March, those accounts had got closed by 15th of April. I am hitting it on 30th April. The bank people are saying, sir, we can't pass this MOC because now I go into the account, search for that account is closed. The CBS says not there because it is running today. It's closed. I can't pass that entry. For balance sheet purpose, they will pass that entry. Balance sheet is CBS balance plus journal voucher. This MOCs, they will get a trial balance. It's Excel driven, system driven. So they get a balance. And you have an annual report finalized. But you have to pass that entry in the next year, no? When you go to the next year and pass the entry will not be accepted. It will be hit. 3:30. Okay. So that is MOC. So you have to understand CBS. Then MOC. MOC is that. So all the balances will be taken up and there is a system to process MOCs. It will hit, the CBS trial balance is taken. All MOCs will be added to that system. It's completely integrated and you get the balance, trial balance as of 31st March with MOC. Pre-MOC, post-MOC is the word we use. Pre-MOC is without these MOCs, trial balance. Post-MOCs is after this MOC, we have a trial balance. This will go to the balance sheet. And it will hit, all these entry will hit as on date once the board approves. The date of board of meeting, they will approve and it hits on that day. So on that day, the CBS will be impacted for those entries. So for that also there is a system now. How it goes to impact, because it goes to the branches, it goes to the zone to branches, it goes. It's a very big software. We had unreconciled entry, huge crores we had. Now they have put it into system, so it goes automatically and it will hit each and every branch. So this is it. I'm very short. Yeah, okay. We'll have a break, short break. Hope this is okay. My presentation is okay, or I'm too fast, too slow, or I'm not communicating. I should have asked earlier. I'm sorry. Is okay? We'll now go into the restructuring norms, IRAC norms on restructuring. So anything, any advances which you change the terms of the sanction, normally it becomes a restructuring. It is called restructuring, like a modification of the terms, alteration of the payment period, alteration of installments, alteration of rate of interest, rollover, additional facilities. These, if you do it on a stressed account, if the account is stressed and you try to help them out by giving these benefits, concessions, then it becomes a restructuring. The moment you do a restructuring like this, it becomes substandard, automatically standard to substandard, downgraded to substandard. And only when 1 year after the satisfactory performance, it can be upgraded to standard. And there should not be any overdues during that 1 year. After the principal interest repayment starts, from that date onwards, within 1 year, it should have a time gap of that 1 year. In that 1 year, it should not have any SMA 1 or 2. It can be up to SMA 0, that is 30 days overdues can be there. Any overdue more than 30 days, then it doesn't qualify to be upgraded. So that time starts after that. Once it becomes due, overdues go over, again 1 year. So it can't be upgraded. It remains substandard. So whatever provisioning norms, it has to be applied. So there are certain cases. The circular is on the top given. This is a stress result circular. In the chapter 5, it is given on the restructuring. There are certain exemptions to this restructuring, where the restructuring automatically will not be considered as a substandard. So wherever the asset is stressed, in certain cases, it need not be treated as substandard. So at that particular time, whatever it is, suppose it is already a substandard, it will remain in substandard. It will not downgrade to D1. So that is happens in these cases. That is called DCCO. So once that date is fixed for the project commencement, and if you change the date, that also becomes a restructuring. So wherever it is infra projects, you are given 2 years plus 1 year. So in not court cases, so and 1 more year for certain court cases. So normally it is 3 years, they will say. 3 years you can go for extending the DCCO date, so that it remains standard, or it remains on that date where whatever classification it was, it will remain, it is freezed. If it is standard, it is standard. And non-infra cases, project cases, 2 years. Infra, non-infra. So this is the categorization where it is specifically treated as not restructuring. Hence, it will not go through the NPA process. There is extra provisioning for that. Again, that is handled at HO. Only the restructuring you are supposed to take. Anyhow, the auditors you have to verify whether it is restructured. If it is restructured, if it is an NPA, then it goes into the normal classification. If it is restructured and not treated as an NPA, it is a standard asset, then you have to go through the norms, whether it satisfies those criteria, whether it is complying with that criteria, whether overdues are not there, and then documentations, a lot of documentations has to be gone through. So if that is done, that has to be certified. So every auditor at the branch level, each and every restructured account, where a lot of years it will be there, 3 years, 4 years, and all restructuring will be there. So we have to certify that this account is all right to be retained at restructured standard account. So whatever classification it is, branch auditors has to certify each and every account. Just quickly we'll go through because I'm running short of time. NPI means non-performing investment. SMA, you already told. Okay. Ad hoc limits to be regularized in? Okay. 6 months you said, no? That is renewal. This is ad hoc limit. Ad hoc limit is 3 months. It has to be regularized. Next is this. This is renewal. Renewal is different, ad hoc is different. State government guaranteed accounts becomes irregular. Will not turn into NPA. False. Valuation of movable properties into NPA, 3 years. I think we'll skip this, it will take time. How to determine NPA? Is it okay? I'll skip this, or you want it? Tell me whether this is NPA. Whether it is NPA or not. He has submitted stock statement 12 crores. Limit is 10 crores. He is overdue on, limit is 10 crores. When he is overdue, out of order, from what date? On 31/12. Correct? He is crossing the limit on 31/12. He has become overdue on the day end, 31/12. Then it is 90 days. So, January 30 days, February 28 days, March 30 days. 90 days crossed from 31/12. More than is irregular. 12 crores DP doesn't come into picture at all. He is irregular already. His security is nothing to do with this account. So he is NPA. This I think I will skip it because I have to discuss 2-3 cases in this. Or you want? Here he is irregular on 31 January. Okay. Day end 31 January he is irregular. So as of 31st March, February 28 plus March. So that's all. So it is 60 days. He is irregular by 60 days. So automatically he is not out of order as per the account is concerned. In scenario 1, stock statement given 10 lakhs. Not furnished. September he has given. So October onwards, October is okay. November, December, Jan, February, it's not. March, it's not there. So he becomes NPA because limit is not there. 3-month stock statement, old stock statement, not to be considered. Literally, we have to treat him as NPA. In the other case, he has given October stock statement, second scenario. That means November is done, Jan, February. After that, he has not March. So March. So it is only 30 days. So October he has given, so November is clear. December, Jan, February, March. Not furnished subsequently. Okay, he is irregular. But he has given in February. Okay. So that means February and March is irregular. So he is not an NPA in that account. Okay. He is out of order. S2 irregular only 60 days. In scenario 2 is only 60 days. Though he has given in October, then in February he has given. So he is not out of order. 60 days out of order. So here the account 60 days and DP also not furnished for 60 days. So 90 days norms not crossed. Just a simple example I have given just to understand how we normally treat DP. Here, the date automatically system will take care. In the first case, automatically system will do it. You need not touch it. DP stock statement was what we have to worry. He has given it. So system will make him NPA. Second, you have to make it NPA because stock statement is not proper in the first case. Second case, stock statement is there. So no issues. I will quickly run through documentation before taking LFAR. I have to skip a lot of slides because these are all a bit for the members. Once you go to the branch, what are the documents you have to ask? The first was on the provision. You have to see. What you have to see is first provision. See the year-end outstanding liability is done. Bank is not like a corporates. So they don't know what is outstanding liability to be provided for. First see the closing circular issued by the corporate office to the branches. The closing circular will say what are all the items you have to pass. And once you have to see first is electricity bill, EB bill. It's done bi-monthly. So next March maybe not provided for at all. Next is rent. If it is own building, no issues. If it is a rented building, provision for rent has to be made. They will say, sir, April will pay May. So last time, March will be paid in April. So last March has come in this April, they'll say. So 12 months will be there. We cannot accept that. So it has to be changed to provision. So this is the classic example the branch will tell you. So March will be done in next April. So this month it will go to the next year. That is what they'll say, but 12 months will be there. So that is the problem in rent. And EB is another problem is they will say our branch is shared with another branch, share, another zone. They will pay the rent. They will pay the EB. That is one problem. So you have to find out whether he has really paid or not. Otherwise both provision will not be there because he will take bi-monthly, he will not provide. Mine also not provided. So that is a problem. So this already happens. We have live cases everywhere. And another thing is EB. Of course, that is not relevant. Of course, for 48.3 is that cash system is not there. They pay only by cash. EB, they still pay by cash because branch does not have a, net banking facilities. They are not authorized. Branch managers, most of the banks, they are not authorized to do net banking from the bank side. They may have net banking on their own, not for bank. So they can't pay and they can't issue a check. It never gets credited. It will get credited allotted. DD they will never do. That's what they do with DD, but they will never do that. So in March it will not come at all. And for that easily they pay by cash. Still cash is accepted in many places. So they say cash means it's paid to government, so it is exempted. Correct? So why are we worried about? You can pay cash to the government, no? It's EB, no? EB is government, no? Any thought on that? Of course, not relevant for us because branch we are not going to see tax audit. But you have to make it as a point to central auditor. In LFA, you have to say this is an important point I am making to the central auditor. Whether you take it up for tax audit or not, I have found that. If you have found it, you give it. If you don't do it, no problem. But this is a good point, no? Because the cash EB collection in North and all, if you see Bombay and all, it is a company. Here, your Tangetco is not a government company. It's a company. Company formed by the government. It is a quasi-government. It's a company. In fact, registered with ROC. It is a company. It is not a government at all. So, you are not making the payment to government. It is paid to a company. So, it is not exempted under 48.3. So, that is an issue. We had a lot of disallowances. In the year end, we have made a lot of disallowances. Then later on, they said we will not disallow it. They took a call that it is a government only. Something like that. They made something. I don't know how. But it's not government. So that is on provision for outstanding liabilities. Long pending entries, BAL, BGL, nil balances. You have to see whether all the certain codes will have only nil balances. You cannot have any balances in your trial balance. In branches I am talking about. Certain balances. That also would be referred in closing circular. Sometimes they would have given it. Otherwise you have to see that cannot have a balance. Some suspense account and all. It should not have a balance. It should be turned to zero. Maybe in the month end it will have balance. Other months it will have a balance. But March it should be made to zero. So that we have to see. Negative balances should not be there. Sometimes negative is possible because it is overall when you take it to zone or overall if you take it to corporate office it will turn positive. So those account will show negative like recoveries from postages and all will be show negative in the branch. But collection will expenditure will be there. So then it will come to positive. So that is accepted. So what is accepted, what negative is not accepted, something we have to dwell upon it and see. Otherwise if it is a mistake, it gets not captured. Then auditor login. You are the person going into the bank audit. You please log in. You are given an auditor's login. If you don't log in, RBI will say that you have not audited this branch. You have just given the report. They have all right to say because one meeting they told me, please log in. So once you get your auditor's login, at least log in. Do whatever you want in that. Log in first. So then that means you have entered. Of course, in concurrent audits, you would have seen every day you are logging in. But here the auditor's login will be enabled. Sometimes it takes late. So do that first. The moment you enter or before you go for the audit, you call that manager, tell him that you want the auditor's login ready by the time when you visit that branch. That is very important. Previous year LFAR, audit reports, inspection reports. I'll give a go on this. This also I'll go. List of frauds reported. Please be very careful. You have to ask whether the frauds are there because otherwise you will never find it. Everything is accounted in the head office. So you will never get to know from the accounts that there is a fraud. So you have to ask the manager, get a representation probably, if it's possible, that there are no frauds reported during the audit period. Not earlier one. Earlier ones you are not worried about. During the audit period, there should not be any fraud. If it is there, you have to report because LFAR reports it. You have to say frauds in LFAR, you have to say. So for that, you have to get the details. Quick mortality, I discussed in the first session. You have to give it. Details has been asked in LFAR. Security-wise classification, NPA date, I have already told you. Now, this is what I was talking about, MOCs. So, what are the MOCs you give? You have to give MOC for substandard, standard, substandard in D1, D2, D3. You want to make a reclassification, you have to give an MOC. Then, you want to transfer anything from asset to asset, account-wise, different account in asset, within liability, different account, or asset to liability changes in figures, vice versa. Asset to P&L, P&L to asset, vice versa to liability, anything. all permutation combination, it is there in that MOC, you have to give it. It will say what is the account to be debited, what is the account to be credited, what you want to classify it as. So that everything is given in that. It's all now system driven. You are not doing any manual entries. It will be system driven. So you have to enter into the system. Again, closing circulars will probably give you how to enter it. Probably the department itself will enter. You need not enter it because it's very difficult to enter it sometimes. So the department themselves enter. You have to just see whether it is properly entered and then you have to give a go for that. That is one thing. Security classifications like priority, non-priority, secured, unsecured. All those things also you have to give a MOC. Then SFVM. What is SFVM? Anyone? You have done branch audit, no? This name will be there in all banks. I don't think it's specific for one bank or whatever it is. SFVM you have not heard of in bank. What it is? Safe, furniture, vehicle, machinery. It is nothing but fixed assets, PPE. If you go and ask in the bank fixed assets, they will say nothing is there. They won't understand that word. SFVM you tell, they know everything. There's a very big issues on SFVM. You have to see what are the assets purchased during the year, sold during the year, transfer in, transfer out. That is what normally happens. Transfer from other branch, transfer to other branch. This is what will happen. Whether employee is transferring or out, the assets will go and come out. That will be there. So this plus minus of on assets has to be seen. Depreciation, you are not putting it at all. It is completely centralized. You are not putting any depreciation. You are not going checking any depreciation. It's all centralized. Only the assets you have to see whether the assets purchased are proper with proper sanction, sold, proper sanction, zonal sanction or head office sanction. Branch managers, if it is within the branch manager's sanction, you have to see. First of all, you have to get the sanctioning authority details. No manager will give you. Try to get it. You enter into the branch, you will never get it. The last day when you are coming out, probably he'll give you that and take it back from you. So it's very difficult to get it from him. With that, you will fix what are the powers he can do. So that whether he can purchase that asset, whether he can sell that asset, or they have to put bidding on all that, auction, whatever it is, that is all there. That has to be followed. Transfer in, transfer out, you have to have the voucher, confirmation from the other branch, what is the amount they are value they are transferring. So just it has to be added. So that will be a statement or transfer in, purchase, just like that. There is no question of any fixed as a schedule. It will not come to you. This just in, out, everything will come. You have to certify that. That is all. And if there is any change in that wrongly entered or not, that will have an MOC. So these are the MOCs you are going to certify. And if it is nil, you have to give a nil MOC. They will not leave you. You have to see nil. And your auditor's report, please see, there is MOC summary is there. In your auditor's report, MOC summary will be there. What is the increase, decrease? It's like cash flow statement. Plus, minus, debit, credit. Debit will be plus, credit also will be plus. It's an increase, decrease, they will say. On what are the items? Increase, decrease. Every time that is wrongly entered in head office, we have problems on how to tally that. Because they will just say wherever it is want, they will put it in plus, they will put in minus. It will not tally. So in head office, one staff will be put for that to correct it. So that is what it is. So you have to understand where to put plus or minus on that MOC. So if you give MOC, that will come into your audit report. Then you have to give why you want to give the MOC. Just don't give it and leave it. Then we won't know what for this MOC is given. Auditors have to give this MOCs. What is the reason? If there is a working, annex it or give it in LFAR or some other where you can give. In LFAR, any other point to central auditor, I am going to take there. You can mention everything. We will tag that. So at least if there is a remarks column. It definitely fits in. So you can just give a brief remark as to what it is, how the working is arrived at. Even working, we won't know how it is. So please give the workings. Exception reports, sir, you covered, no? Morning. Exception reports, sir, has covered. This I can skip. When the stock statements, I will cover this separately. Only one point, Caro. When you are seeing audited balance sheet of a particular borrower, see the Caro report. Wherever it is more than 5 crores, the Caro auditor will say that the returns filed with the bank tallies to the general ledger. If it doesn't tally, he'll give the figures. In one case, I've said he has borrowed, the party has borrowed working capital. I'm having a borrower before me, he's borrowed 5 crores, 10 crores he has borrowed. The Caro audit report says he is not required to furnish statements to the bank, he says. How? More than 5 crores he is supposed to give. Then how the auditor in Caro says that he is not required to furnish. Why he is not required to furnish? I put a question. Why that auditor asked this auditor why he has given like that? He is required to furnish. And then I have to compare whether it is correctly given. Is the ledger correctly tallies, reconciles to my statement given to the bank? That is what the auditor is supposed to give. They don't see. No one sees that. This ABS is sitting there for 3-4 months. No one is seeing why this auditor has given this. They don't know what to see. They don't know anything to see. Because they are all business people, bankers. They will not see. This is where we step in and tell them, see, this is it, this is it. Then they will understand. So he has given just like that. And in some cases, even if you see, you go and see MNC companies, big corporate giants, there is a big table itself on that. Where is the difference? Why there are differences? They will say why there is a difference. There will be difference. It cannot tally. They just give everything. But in these small cases, at least that will be a yardstick for you to that auditors confirm there is no issues. You can note down. If it is given, then it is a concern. If he gives something it is not required, then it is a concern for us. Why he has given like that? He has a borrowing there. Backdated stock statements in CBS. This is a very, very important thing. It is being done. They backdate the stock statements. They don't receive the stock statements. They will just enter it as receipt and figure the figures. Very, very RBI is taking very serious on that. So we have to see those cases. So go and see whether they are supported by documentation. I don't want to, stock audits already he has discussed. We are finding a lot of issues on stock audits where stock audits give different issues, but it is not captured. It is not seen at all. I don't want to go much into it. Be very careful. It is RFA accounts. So once EWS, I'm coming, there is another slide I think. I'll get into that. Okay. So this is okay. I have already covered. Again, already covered. Gold loan I've already covered. EWS. So these are some, there is a separate circular. If you give the guidance note, it gives the circular details where it is a early warning signals. GST issues, return filings. Even now you can see GST reconciliation with the turnover of the party to find out whether he is genuine, reporting properly. The threshold limit from EWS to RFA, red flag, is 500 million, and within 1 month of EWS it gets transferred to RFA, and 6 months of RFA it becomes a fraud. So this is very, very important. So RBI is very, very clear on EWS and RFA. Once it is tagged, you have to be very careful. So that has to be seen that your branch is not having any such issues. Then you are clear. I've covered all these things. Just quickly on this, outstanding provision I've already done. Stock statements. What we find in stock audits, stock statements are the details of the stock is never mentioned. It just says stock, raw materials or total stock, so much of value. We don't know the breakup, we don't know the value, whether it is as per AS2 or all those things. That is nothing displayed, just the total is getting displayed. Creditors sometimes are not at all reduced. Totally not reduced. Just they'll say, even if I reduce creditors, I'll be within the limit. He'll say that is not correct. We don't know in which month it will have a problem later. So we have to ensure that creditors is reduced, that format is followed. Book debts, age-wise they don't take it, 90 days, 60 days they may have it, even 120 days sometimes, very rarely. So that age-wise the book debts are not configured. Entire book debts is given. We don't know how many age-wise is not at all mentioned. A CA certificate quarterly statement of book debts should be received, not taken. This you have to see whether they take it. ABS, when we get the ABS, first thing we will see in ABS is what is the stock, what is the book debts, what is the creditors given in the annual report. I will ask for the March stock statement. Compare it. Invariably, in many cases, my DP fails. DP fails. Don't even find there is a difference. DP itself fails. You can very well see that. Now you go to the branch, CC account, take high value items, ask for the ABS, ask for the March stock statement. Compare it. Difference will be there. Stock will be inflated. Creditors will be deflated. Debtors will be inflated to higher extent. No way they can give any explanation. They'll just say subsequent, if I report this, of course I don't make an NPA, okay. The reply they will close it. They will give for this LFAR question, they will give a reply. Subsequent stock statement, it is DPE sufficient. This is the answer the branch manager will give. I will tell you what's the answer. They don't go into it at all. They are defrauding, they don't know. They are not even accepting. When it will come to a problem, we don't know. This time it will not be a problem. But I have cases where I have turned them into NPA. I have done it. Because of March, there is no stock statement. I will not rely on the entire stock statements. Then what we do is we will have him to do a stock audit. Then only I'll rely, I'll say. But stock audit is not on all cases. High value 5 crores, no? So 5 crores only stock audit will be done. So it can't be done lesser than that. So there is a problem. So you can just see this and give an input, your value addition, that there is a difference. Please be careful. As auditors, wherever it is not turning into NPA, give a lot of things in the LFAR. It's just small points, whatever value addition, just put it in the report. It's easy. Then later on, if there is any problem comes also, no one will come back to you. Say, I have put it in my report. That's all. For them to take it or close it. It will be automatically closed. They will not take it. Unless there is a problem, they will never close it. They will never keep it open. They will close it. On sister concern, be very careful. Sister concern trading with sister concern should be approved in the sanction. Then only you can take it. Then we will go to LFAR. The LFAR has been revised in September 20. Till then, ages together we had one single LFAR. This is a better LFAR. That's what we can say. Aiming for a lot of improvements. Annexure 1 is the LFAR for bank as a whole, where central auditor will take out. It is not exactly the replica of that branch into a central audit. It is not like that for the bank. The bank, the question is different. Lot of MIS informations are given, and the branch reports which are coming in the annexures, advances and other things will be added as an annexure to the bank's LFAR. Otherwise, bank LFAR comes on risk management, whatever sir has taken in the morning, risk, investments, each and every category it is given in a different questions are there. We have to give on that. We have to talk about systems audit, complete IT infrastructure, governance, everything is there. It's a completely different. So we are now on to the branches. In branches, LFAR for bank, branches, then additional questionnaire for specific specialized branches, forex branches, clearing operations, SAM branches, recovery branches. Then irregular large advances. So this is something to be reported by the branch. So the branches will be, the second annexure 2 is important. 3 only for specific branches you will not be doing in all cases. Annexure 2. 3 you will be doing. So 2 and 3 will be done by you as a branch auditor. This is why objective is given, that is improvement in regulatory requirements, risk management, efficiency, data integrity. These are all the aims they have set, objectives for amending this LFAR. The last point is, whatever you report in LFAR need not be a qualification in your auditor's report. Please bear in mind. You can qualify if it is required to. Otherwise, it need not be qualified. So you have to just report it in LFAR. LFAR will have a lot of issues. It need not be again mentioned in your auditor's report. That is different. This is different. So these are the timelines for the bank LFAR. The last one is the format of branch LFAR will have bank questionnaire, complete questionnaire on various heads. I will be telling you about that. And whatever it is to be reported, it will go into the annexure. Some will have this text besides the questionnaire itself. You can give yes, no, not applicable, some small text you can give. Certain things which you have to report, a lot of borrowers, details you have to report will be taken into annexure. So the annexure will be there, A, B, C, D, like that, 1, 2, 3, 4. It will have so many annexures will be there. So you have to get into that annexure, enter the account number, value or name, automatically it will get fetched. Then what is the issue? So the formats will be different for each and every annexure, the way in which the questionnaire is designed. Then large borrowers is the critical advanced borrowers. We will come to that. So the LFAR is in 4 format, 4 divisions: asset, liabilities, P&L and general. In nutshell, I am giving what it is. Cash, they talk about physical verification, ATM reconciliation, holding limits. This is what they talk about. In RBI balances and all, other banks, confirmations and reconciliation. Suspense accounts, receivables, unusual items, outstanding entries, number of years and all they will ask. That is what to be reported. In deposits, dormant, inoperative, unusual movements. That is, they'll be asking question on that. Other liabilities, so again old outstanding and any unusual items, number of years and all they will be asking. In P&L account, excess short of material amount you have to report, recoveries, shortages of interest observed by you, you have to give. NPA reversals has to be commented upon. Overdue deposit, whether they are providing interest. So overdue deposits, you have to, as per RBI, you have to provide interest. Overdue means then you have to provide interest for that on the normal SB rate. Divergent trends, if you have observed anything in the P&L account, you have to report. Other critical areas is securities, exception reports. Interbranch adjustment is very, very important. Frauds detected, which I already told you about. KYC, AML already discussed in the morning. That has compliances has to be given. What are the other reports you have seen? That is it. Here, any other matter to SCA is given in 4.7.b under miscellaneous. Here, don't write anything on advances. In advances, there is any other matter. Any other item which doesn't come under any specific connection, you can give it in the last item. Any other matter. This any other matter is nothing to do with the advances, because all auditors, what they do is they copy everything here. Even advances are coming here. This is any other matter to SCA, like you want to report on GST, you want to report on anything else, tax audit or something like that you want to report. Anything else you want to say that statutory auditor has to see. That you report here, not to advances. That you have to please keep in mind, because it repeats. Now these generally I have just picked up important questionnaire in the LFAR. So first on cash, ATM balances, physical verification, then holding limits. This is the first annexure. Holding limits. How many times you have exceeded the holding limits of the branch? This still now they are asking. We have to give that. That can be taken even by them. I don't know why auditor has to certify even now. We give numbers. We don't give values, independent values. We'll say 10 items, 20 times it has exceeded, 30 times it has exceeded. Like that we have to give. So it is auto-populated. It will come from the system. Report will come. You have to just enter it. That's all. ATM reconciliation. Then balance with RBI, Treasury, unresponded. Anything if it is unresponded, it requires adjustments is what we have to worry about. Then MOC has to be given. Mismatches. That is what you have to report. Normally it will not be there. Very rare. Money and call notice investments. It will not apply to your small branches. Not even big branches, it will not apply. The advances, this is the crux of LFAR. It is segregated like this. List of accounts, credit appraisal, you have already talked in the morning, sanctioning and disbursement, documentation, review monitoring. That's what Sir said about monitoring. DB, ABS. ABS is audited balance sheet. Stock audits, DDR, due diligence, security, RFA, EWS, top 5 advances. I will come to that later. Then asset classification, provisioning, SMA, upgrading, the restructuring, IBC, decrease, recoveries. You have to give a report on that. Then interchangeability. This is what I told you, NFB, interchangeability from fund-based to non-fund based. From non-fund based to fund-based. These are the questions they'll be asking. So now what is large borrowers? We already discussed again in the morning that it is more than 10% of the total funded, non-funded, or 10 crores. Whichever is lesser. So you have to fix that. The moment you go into the branch, you have to fix this value. What is the value for this branch? So any advances, both put together, funded, non-funded, any party's amount exceeding that benchmark limit is a large borrower. So that borrower has to be completely seen. It is a transaction audit. The technical guide of ICAI for large borrowers of LFAR. So that will clearly say what you have to do. It is a transaction audit. Rest are all process audit. So you can do that and keep that you have done it proper. This is a sampling system which you have to do. So for large advances, you have to completely see what is the sanction, everything. Because for this large advances, they have a separate annexure. This annexure is filled by the branch. Right from the name of the party, who's the promoter of that, his address, details, what are the securities line by line, entire securities, 3 years balance sheet details, ratios, turnover, that is credit summation, debit summation, everything is given into 5 to 6 pages, something like that he has given on for one borrower, each and every borrower. After that, the last line will be auditor's comment. You have to see what, you have to give the comment as to this borrower, what are the issues you have to give. This is all you have to do. For that, you have to see everything what Sir has said in the morning, everything you have to see. On advance verification, sanctioning, monitoring, entire thing you have to see. If it is an NPA, then what I said also, that also you have to see. Security verification, everything, recoveries, all that thing you have to see. So one account, if you probably in a branch, you'll have 4 to 5 accounts, large borrowers. That's all. Not more than 10. Even I don't have anything more than 10 except 2 branches. I have 40. Like that it will be. So otherwise it is all, that too it will all be high value items and government accounts, something like that. But otherwise you will have only not more than 10. So you have to complete in 3 days that 10 accounts. In line by line you have to see. For that you can rely on the concurrent auditor. If the branch has got concurrent audit, rely on the concurrent audit report. See the inspection report. Internal inspection report is a beautiful document. But only thing it is done in August or September. By the time the action taken would have been done. Mostly it would have gone. What is still persisting you can take. Not done. That you can write. So this is the second item which you can take. These are the only main 2 reports you can have. Invariably concurrent audit we may rely, we may not rely, because I don't know, they don't write anything. Very difficult for us. I found that the concurrent auditor is not writing anything at all. So you can say he has not written, so I have also not seen, because you can't go and see all the sanctions. How many sanctions you will see within 2-3 days. So at least what we do is we take new sanctions during that year, see high value in that, take that. Not all. All the 10 borrowers I can't see the sanctions, but you are supposed to see. It is a transaction audit. At least 10 items or 5 items like that, you take it up and see entire thing, including the documentation. This is the threshold limit is talking about. Same thing. And this is what you have to give. What are the advances you have seen? Mostly it will be large borrowers only. Anything which the technical guide says that you have to see something else also, not only the large borrowers. See something which is less also. 2 or 3 accounts which is less for sampling purposes. So whatever you have seen, you have to give this. Once you give the account number, automatically it will get populated. So it will give the percentage of verified, both funded, non-funded. Percentage will come. This is mandatory. So it will tell you what is the percentage you have seen. It's a good document for RBI to ask you why you have seen less. So that is one thing. Credit appraisal already seen. You have to just, these are all informations to be seen once you have finished the audit. There is nothing new in this. Credit appraisal also you have seen, quick mortality and other interest, whether correctly fed in, MCLR, EBLR, whether it is changed, whether that has been configured into the system for some changes, whether it has been done. You have to see for the large advances. Renewal, rollover of short-term loans, whether renewal is done. So go by the ad hoc renewal. This I've already discussed again. Credit rating, that is very important. What is the impact on the credit rating, whether it is fed into the system, what is the issue in the credit rating, whether it is not done, then the huge penalty is there. So that and all we have to report on the large borrowers. Rest you need not. So at least large borrowers, everything has to be seen. What are here is, it is to be seen. Sanctioning disbursement you have already seen, without delegation authority, without complying the terms and conditions, that can be there. Again, it will be captured on the large borrowers, and otherwise you can take it from the concurrent auditors or the inspection report. Lien and all okay. Documentation, any issues on document. This is where we will have a lot of problems. Lot of items will get reported only in this. In this document is not there, that is not obtained, this is not obtained. You have got a lot of things in that inspection register, all those things what we discussed. So this will be elaborate report. For that they will say once the credit limit sanction, the question will be here, on that side it will be annexure. I just given my note that will be an annexure on that side. Just you click that, it will go to that annexure. Then it will ask for the information specific to that question. So you have to fill in. So once you go there and start writing report, because see, once you go to a branch, you will take the file and see. You will see the accounts. One person will be seeing the file, one person will be seeing the system. Then the report has to be written. Once you write the report, write it in Excel. Whatever way you are writing, I don't know, but at least in Excel. So you can insert the annexure reference in as one column. Then you can filter it and easily enter it into this LFAR. So LFAR is systemized. No, there's no question of any manual LFAR. I think everything is systemized now. So it has to be a manual entry only. Sometimes you can copy from Excel. I'm not sure. It depends on the bank. Otherwise, you have to enter it. But if you have a first item in the report which you have written as annexure A, another item comes to annexure S, another item comes into annexure B. How will you enter? You can't go A, then go to B, then go to S. It's very difficult to enter in the system. Then you have to filter it. So for that, you have to enter the reference. So one person finishes the report. Then the audit manager will now decide which annexure it has to fit in. So there will be a separate column in that Excel. So he'll fit in what is it. This should go to A, this should go to S. Like that if he fits it. Then you can filter it and enter in one go. You can give one annexure one. But only thing, you can't open LFAR in two systems. I don't think it is possible. In some banks it is not possible. So only one system you can open, only one person can work on that. So the reports to be fed into the system of LFAR is very difficult. Sometimes it will be very difficult. I am not sure about other banks, but it can be only one entry, one login you can open only once, because multiple login you can't do it, they can't update. So it may have a problem. So time consuming, that is why. So you have to be very clear when you start writing the report in a reportable format, where you can insert the annexure reference to LFAR later. So that be very careful. Balance confirmation, AOD, this also you can give 3 months. Review, I said no, it's 3 to 6 months, over 6 months. Renewal pending. Book debts, we have already discussed. ABS is the last item. Stock audit, CARO also I've mentioned it. These are all on the stock book debts, ABS. Non-corporate entities, it has to be audited. A limit is fixed by the bank. So that you have to take it. And see whether non-corporate entities, the audit report is given. Normally they give the tax audit report. So that has to be received, or if there is no tax audit, some audit has to be done and a report should be there. Auditor's report should be there for non-corporate entities exceeding the limit fixed by the bank. It's an ABS. And due diligence report is only coming under consortium, where it is multiple banking, where their status is shared to the our bank. Securities I have already discussed. Deficiencies on the verification advance, this is the last resort. Any item you want to give anything which is not there in any of the annexure, last resort, this is the annexure which you have to fill in all other irregularities. Red flagged accounts we have discussed. Now come the last one is file standard large advances. We are giving large borrowals. Large borrowals includes NPA also. That you have to keep in mind. Large borrowals doesn't mean that 10 crores case we have taken, that doesn't mean it is only standard. Even an NPA can be in that. So it goes with the numbers. Now irrespective of the type of advance, standard or NPA. So here he is asking 5 standard advances. So if you have a top 5 which includes NPA, remove that. And if you don't have any 5 after removing, then you have to include one more below the line as standard. So that 5, at least 5 standard should be there. So that has to be seen. Everything has to be seen for that. That is a new addition in LFAR. 5 standard advances. Adverse features. So that you are supposed to see all the sanctioning details for that 5 advances. Doubtful. These are IRAC norms. Totally these are all IRAC norms without manual intervention. That is automation he is talking about. Anyhow it is automated only. All the banks are automated. Manual intervention is whenever they want to do it, I told you that they will have some details on that, which normally at branch level you will never get it. At head office level we will be able to find out where manual intervention is done, because it goes with the audit committee. We can get it. SMA 012 whether properly done, or if you disagree, how you have disagreed. MOC whether it is given, he is asking. MOC again. Downgrading, upgrading of more than 10 crores reported, he is asking. It's all disclosures only. Restructured, IBC, all those things now it will come. Next one is upgrading NPAs again, and upgrading whether done properly. These are all the same. We have already discussed. It's put as a question here. Any authorized legal action to be taken but not taken, where you have to report. IBC issues, whether it is initiated by bank or initiated by creditors, we have to report. ECGC settled, rejected, whether properly considered for valuation in NPA, this is information we have to give. Valuation reports we have already discussed. In valuation report in NPA, one more thing is on the distress value, market value, fair market value. We are supposed to take, if it is an NPA, distress value. This will be clearly given in the market valuation report. So sometimes they take market value. Sometimes they take fair market. Whichever is higher, they will try to take. You have to take distress value. That will be the lower. A decrease and all, it's okay, general. Recovery is how it is appropriated. Then major deficiencies, credit monitoring, supervision. This is the rest of the items in the advances. Devolvement of LCs, invoking of BGs, you have to give the details, interchangeability, everything is asking in this. We have already discussed that. Now it is in that question. Just observations on LFAR, common errors. It is an online entry. Standard as well as non NPAs are to be given for large borrowers. I'm talking about. This will be entered by the branch only. Normally the system opens for branches. They will enter that large borrowers. We don't have any access to that. They'll share the information, PDF sort of thing. You can't edit also. So in that there will be editable portion of advanced auditor's comment will come against that each and every borrower, where we have to enter our comments. Normally see whether the figures are entered properly, because somewhere they enter as lakhs, somewhere they enter as crores, somewhere they enter as absolute figures. So it has to be uniform in the branch details. You have to ask them to correct it. Then large borrowers, you have to have an index. Otherwise, how will you know that large borrowers have been taken correctly? So the index has to show how many large borrowers are there, crossing the 10%, whatever I said, and that numbers has to be freezed, signed by the branch manager and the auditor. Otherwise, we will not know whether he misses or misses. You will have seen it, but it will not come in the report. The common error is annexures are given wrongly. So someone which has to come in the annexure A, it will go to annexure C or B or like that. Wrong reference to annexures, duplication in annexures. These all happens normally. So your report should be proper. Please enter it properly. So clearly it goes into each and every annexure. Suspense accounts, 90 days, wherever it is, give entries, whether any MOC is required. Test check unusual entries. Dormant accounts. There is a dormant account, you have to verify. It's supposed to be verified by the auditor. We have to give the report. FCNR, you would have heard of FATCA, something like that. FATCA. So that NRI has to give a FATCA report that it is he's still a non-resident. Then only you can have the foreign accounts in here in the branch. Minimum balance requirement. He says whether it is properly added, because the minimum balance they just charge the fees. They are not intimating to the borrowers. There is an RBI circular that branch has to intimate the borrower, the customer, that the minimum is impacted, so we'll be charging interest. So it comes as an SMS to them. They are not doing, some branches not doing it. Then they cannot levy. So there is a question on that also. Other liabilities, 1 year or more, give the report details. You have to just give disclosure. In P&L account, excess short credits of material nature you have to give. Compliance of income recognition norms, what we discussed on reversal of income. Overdue interest. And then wherever it is overdue, if it is more than 10 years, it goes to DEF account, government account. So that also has to be seen whether they are providing it properly on overdue. Matured account interest is provided. And if there is anything outstanding, normally it is transferred to head office. But if it is outstanding for more than 10 years, any credit, it cannot be in our ledger account. It cannot be taken to P&L account. Gold bullion, you may not have anything. Earlier it was security, stationery and stamps. Now they have added gold and bullion to that. It is not the gold jewel now. It's gold bars. Maintenance of books integrated to CBS or not, we already discussed. IS audit, if it is there, you have to ask whether IS audit was done. Some branches they would have done it. Normally it will be nil, but if it is there, you have to see. You can't say nil when there is a IS audit. So ask the manager of IS audit. If it is not there, fine. If it is there, you have to see what is the report on that. Some branches will get covered. Normally it is done at HO only, but sometimes it will get covered. Exception reports we already discussed. Manual intervention we have already seen. Data integrity. This is what they have said. Whether the data is entered into the system or integrity has to be seen, so that MIS level at a central office or central auditor can rely on those data. That is a general question. It comes in 2-3 places, it is reported. Then interbranch accounts, you have to see the exception report, whether anything beyond the 7 days, any old outstanding are there, we have to make provision. Frauds issues. Next is fraud, we have to see that. Modus operandi, very big detail they have given. Complete modus operandi, what are the issues in fraud they have given. It's a good literature actually. But you have to see what is your measure to counter this fraud also they are asking. So you can give that. It's a good thing, but at a branch level it is very difficult to write. KYC AML you already discussed in the morning. You have to give the whether the adherence to that has been made. You have to give a report. Mainly, you can see there is an ICFR. There is an ICFR report for each and every branch, selected branches. If you are coming under that, you are supposed to see the ICFR. So all this ICFR is RCM will be there. Checklist RCM will be there. Control test would have been done. In most of our cases, what we do is we ask the concurrent auditor of the branch to give the ICFR. Branch auditor will rely on that and finish it. That is how it is done. A branch auditor can never do the RCM testing. It's impossible. With it 2, 3, 4 days, not at all possible. If you are doing it, you have been asked to do it, you have to do it. No other way. You are certifying it is correct. So it is up to you. It's a problem with the branch auditor to comply within the time schedule. Normally, other branches, what they do is the concurrent auditor does that. We verify it and some test checking we do it and comply with as okay. So that can be relied on this MI system and all that report can be relied upon and you can furnish the answer. KYC, AML, manual intervention, all those things, MIS information, everything can be relied from that ICFR. Data integrity. See the technical guide, they have given a lot on that, but of course it's too much for a branch auditor to do it within the time frame. These are the previous audit report which we are relying. The last one is non-advanced related issues. Are there any other matter you want to tell your CA? Is that non-advanced related? Please give that in that. This I have already discussed. Discussion with the branch manager. The LFAR has to be discussed with the branch manager. We cannot do that. You cannot sign off without discussing with the branch manager. So whatever issues you have, you bring it to the branch manager. After your audit manager approves, go and give it to the branch manager. Let it get discussed. Probably it will get settled also. Don't give anything which is generally complied with and all. Don't give such vague thing. We find it in most of the cases. So we should not give like that. So we should be specific. It's applicable, not applicable, or issue is there, you give the issues. Generally complied with means no one can get into any decision on that. 10% you know this. Large advances is picked from A. Okay. Time consuming, so I am not putting it to which one? C, we'll take it as C. Fund based, non-fund based, both put together only large advance is determined. I think it says the last. It's prepared by head office. Large borrowals. Who is preparing the large borrowals? Branch. So branch prepares and auditors comments. Done. Before that, just 1 minute. I will just tell you that once you go to the branch, you will be work will be very less because they will ask you first thing where do you want to go, then where do you want to have your lunch. So because once we start for the lunch, it will be around 2 o'clock. You end up coming only by 5 o'clock. When you want to tour, yes, entire day gone off. So that is how, that's the tactics. Not that they want you to enjoy. That's the tactics by which they don't allow you to do the audit. Of course, no branch people and everything. So that is one way where they will do it. Of course, we're not saying it's wrong, but they are doing like that means our time is short. So still for already we are crunched for time. So that will add to that also. So we have to be very careful with that. Now IPL is there. They'll give you tickets for IPL. That also done. Yeah, I have done. Don't worry. I have done once. So they will do that. So happy auditing, safe travel, and give a quality report. Help your auditors to give a quality report. That is what we expect from you all. Any questions? We are here to answer. Further, any questions you have, we are there.
On behalf of everyone here, I extend my heartfelt thanks to both our speakers for taking your time to be with us today. Your sessions have been truly enlightening and have added great value to us. May I kindly request our Dean Ma'am to kindly come forward and felicitate our speakers. I request Mr. C.A. Ravishankar sir to come forward and receive your memento and inshallah. I also request Mr. C.A. Srikaanth sir to come forward and receive your felicitation.
So the bank audit comes to a close. As Sir rightly said, no, help your auditors, and I will add to that, help yourself, because this is a learning which, as an article clerk, which you do. That is why, if you see, both the resource persons who are here stayed throughout the day. It is not that one finished their session and they moved. It was not like that. They stayed through the entire time of this duration of this bank audit. So I think we have to clap for that. Because this is the kind of impact, because we are actually auditing the financial system of a country. Okay, so don't take any simple job that you do there lightly. Take it very seriously, and I always ask the 5 questions: where, who, what, when, why, and how. Okay, so when you do that, as again told by them, you have to understand the overall perspective of why that audit is done. Why is this check being done? Understand the background, then the work that you do, however simple it is, will be very impactful. With that, thank you so much from SIRC of ICAI also. And I should also we should all thank together the Board of Studies Operations, who is funding the entire expenses of this session. So let us also clap for them. So the more programs that we do, they are willing to fund us for whatever programs we do, which enhances the learning of the students, because you are the future chartered accountants. So thank you so much.
Of SICASA to give the vote of thanks.
Good evening, everyone. So it's a prestigious moment and a privilege to propose the vote of thanks of this insightful bank audit seminar. First and foremost, I want to extend my heartfelt gratitude to our speakers, CA Ravishankar sir and CA Srikaanth sir, for coming and sharing their useful insights, knowledge, and after that, real life example of how you should conduct a bank audit seminar. What are the things you should concentrate? What are the things you should keep an eye on? And after that, I want to personally thank our Dean Ma'am for Dean Ma'am CA Vijayalakshmi Ma'am for providing a wonderful platform for us to conduct a good seminar like this and for a great success. And the most important thing is that I want to personally thank my team, that is SICASA Committee 2026 to 27. So each and every member of the team, each and every member from this 12 have contributed somewhat or another to host a session like this and to bring it into a great success. And after that, I want to thank the coordinators, the staffs who worked here, and also the institution for providing a wonderful opportunity to learn and grow. With this, I would like to complete the session conclude the session by thanking you all once again. And the final thing is that I want to thank each and every participant who has shown up here. Without you guys, this event would have not been a great success like this. So yeah, thank you for everyone for coming here. Thank you.